Hello everyone, welcome to another stream. So let's wait a bit to see people join. You're probably wondering, why are we starting so early this week? What is happening? Basically, we have a new stream schedule. So we have decided to lengthen the streams to give you as much value as we can. We're doing 2 segments per guest. So the whole schedule is found on the website. If you go to the A1 live stream schedule, you will find everything in here. Okay? So every guest, every time, and it syncs to your local time. So the previous one didn't sync, this one syncs, which is a much better option. If you have any questions, any chart requests, anything you want me to look at on the charts, put it in the comment section. I have the comments open on the side. Sluggy, welcome. Patrick, hello. Jeremy, welcome. One Opportunity, welcome. Patrick, how is gold looking? Ace, hello. Gabes, hello. Kier, welcome. Tony says gold, please. Hello, Neo. Hi, Gregor Paul. Gold. Baron says hello. Lewis says hey. Thank you very much for all of the greetings. I wish you a good morning, depending on your time zone. I wish you a happy Friday as well. I'm going to do gold in a second. First, I want to do an introduction for this Friday stream. So it is Friday. The markets are pretty flat. The markets are pretty slow. We are in another slow period. How do I know that? Well, if you look at, what is my USD CAD doing? It's selling off. If you look at the S&P, it's pretty flat. It's not doing much. It is below the 20 MA. It's flat. It's range bound. If you're looking at gold, it is flat as well. If you look at Bitcoin, flat. Oil is pushing up. So oil is the only thing that is producing a clear uptrend. The dollar is on a clear uptrend as well. So the only place personally for me are on the US dollar and on the Japanese yen, which the yen is not cooperating. So the yen just seems to be losing a bunch of value, but I'm guessing that is because of UJ. Because USD-JPY is the main has the most weight when it comes to the Japanese yen index. As UJ goes up, as the dollar gains value, the JXY goes down. Okay. Now this is the time not to be forcing setups. So in trading, there's usually a time when you feel that you don't have enough time to take all of the setups because everything is lining up. It was like that, I would say, in April and in May. That was a time when everything was lining up. So essentially, it was pretty tough not to take a trade, and I didn't know where to start. I kind of lost track of all of the things that were moving because there were so many opportunities. Now comes the time where I'm going through all of the stocks, so going through all of the assets, and I'm searching for a trade. I can't find it. I'm searching for it, but I can't find it. Okay, I can in USD CAD and Swiss yen, but that's about it. Now, that's not a good sign. Usually, when you find yourself searching for setups, going through 200, 300 stocks or currencies or metals or crypto, it's a sign that the markets are not doing much, and that if you do end up taking a lot of trades, you will end up in drawdown. So making money in the good period is easy. Making money when stocks are trending up is easy. Everyone can do it, and everyone does do it. Keeping your profit during this period, during this crash, that's what separates the profitable traders from break-even and losing traders. So in good times, everyone can make money. It's super easy to make money because you just buy, and hold. In the bad times and in the range-bound times is when the market determines who is profitable, who is not. That's the intro speech. Now we can focus on gold. Gold, technicals first, okay? Technicals first. I can see a clear trend line going through these highs. I can see a clear support level at 4K right there. And I can see the price slowing down into that. What usually happens out of this pattern, you either get a break to the upside with momentum, or you get a break to the downside with momentum. If we look at the fundamentals, let me look at the reading on the Edge Finder. Gold is bullish on the Edge Finder. Personally, I think it's all about the interest rates. So even though the Edge Finder is bullish, it is one of the confluences I look at. And one other confluence that I look at the most when it comes to gold is the Fed, okay, the Central Bank of the United States. Personally, I'm betting that the Fed hikes interest rates. Now, some traders may think differently. I know Nick is long on gold, so he may have a different opinion, but I can only tell you what I'm thinking. I'm thinking that the Strait of Hormuz is closed. By the way, I found where you can watch Hormuz traffic. So Strait of Hormuz, if you go to Polymarket, it is the IMF port watch. So if we go to IMF port watch, Strait of Hormuz traffic, this should be the most accurate. So you don't need a Bloomberg terminal. You can find it here. The latest number was from July 19th. I guess it's updated on a weekly basis. Let me see. 19th of July. Yeah, it was basically Sunday, so it gets updated on a weekly basis. Look at this. Transit trade volume is even better. If we go back year to date. So beginning of the year, we were at 2.5 million metric tons. Then the war happened, we went to zero. Inflation at this point was going up. If we pull up inflation alongside of this, so inflation, look at this, from March, April, May, June, July, has been going up and up and up. That is because the strait was closed, no ships were passing. Then the strait was open for a brief time, from June 16th to July 8th. And inflation did come down in the last print. But what happened next? The strait got closed again. So if it's closed again, personally, I don't see any signs that it's going to be open. This time, Trump is not saying that they have a deal, that there will be a deal soon, that they will open the strait soon, that they will remove the blockade soon. This time, Trump is just talking about escalation. That's about it. So I don't think they're going to find a solution until the end of this year. The Middle East has always been this unsolvable thing, basically. So Russia tried it, US tried it. None of them had a lot of success. Okay, that's why I think looking at the past data, it's basically telling us Trump is not going to be able to achieve much. The strait is probably going to remain closed because the longer the strait is closed, the more pressure it puts on the US and all of the neighbors to do something and to try and basically de-escalate or accept unfavorable conditions or pay reparations, something like that. But we know Trump is super stubborn, so I just think until the end of this year, the strait remains mostly closed. And I think it definitely doesn't go back to previous levels. I think it definitely doesn't go back to 2.5 million, or if you look at transit calls year to date, it goes back to 60 or 70 ships per day. I don't see it happening, okay? What does that mean? It means inflation will probably go up. It'll probably go up above 4%, maybe even above 5%. Because yes, only 15 to 20% of the world's oil supply crosses the strait. Now it's even less because they are rerouting it through pipelines. So let's say 10%. But the initial shock is definitely going to happen. The initial shock on the price of oil could push it to 100, maybe even up to 115. So because of higher oil, because of higher energy prices, I believe that the CPI goes above 4 or 5%, and that makes the Fed hike rates. Now, if you know anything about Fed rate hikes, you would know that hikes are very much bearish on things like gold. So the main fundamental driver of gold, in my personal opinion, the way that I'm trading, is telling me gold is bearish. It's telling me I should look for sells and not buy setups. So in this area, it's no man's land, in my opinion. Edgefinder is bullish. Interest rates or the Fed, in my opinion, is bearish on gold. It gives me a conflicting reading. So what I would like to see is I would like to see a break of the 4K level first. I'm definitely not looking for buy setups. I can already tell you that. I would look for sells. So I don't want to sell right now because I could get stuck in a range. I want to get a break lower. Okay, a break of the 4K level. Now, my view can pretty much be translated onto everything that you see on the list here, because everything on the list is pretty much impacted by the price of oil and by the Middle East, right? Everything that you see on the list is highly correlated to the Middle East, okay? So you can say that for stocks, that I would look for sell setups if we break down. You can say that for the DAX, the Russell, silver, Bitcoin. I did have a bullish attempt on silver. I tried to go long. It didn't really work out. So I did try it, okay? But now I've completely flipped my view. I would rather look for sell setups. Crypto, same thing. By the way, if you do want to join the free Discord, I will post a link in the comments right now. Let me grab the link. So free Discord. Comments, paste and post. In the comment section, you will find the link to join the A1 Trading free Discord. There's also a premium version, so you can become a paid member as well. If you want to get all of our trades, it's Nick, it's Ivan, it's Chris Pulliver, Alan, and me, and a bunch of other successful traders who know what they're doing. They are doing prop firms, they're getting payouts, they trade private capital, they're pretty successful. So I would say best Discord in the space. If you want to join the free Discord, the link is out. If you want to join the paid Discord, the link is in the description of the stream. And you can use the code MARCO to get a nice discount. Now, this code also gives you 45% off on the Edgefinder. So we're running a massive sale, biggest sale of the year, 45% off Edgefinder, game changer for retail traders. I use it on a daily basis, not just for the top setups, but for a bunch of data that's here, and it's in one place. So I no longer have to open 20 different tabs in my Chrome browser. I can just go to the Edgefinder. I can find the data that I need. I can look at the trend. And what I'm seeing in inflation, CPI, the trend is up very clearly. Okay? So let's continue. Let me see some comments. USD is kind of weak today. I wonder why. Maybe it's just Friday, some profit taking. Can you check the Nasdaq? Yes, absolutely. Nick, hello, welcome. Kiefer, hello. Live is so early. Yeah, but we have a new schedule. We're streaming for much, much longer. Thank you, Sluggy. Appreciate your insights. No worries, Patrick. The Red Sea as well. I heard that there's a different sort of strait, the Bab al something strait, that the Houthis can close, so it can escalate. But for now, it's not in the equation, so I'm not counting on that. I'm holding it, wondering what if oil goes down. It looks like it's headed back to 70. I don't think so. Strait is still closed. No reason for it to go down. Anything can happen, but I don't see a fundamental reason. Why is it fake, and why would you sell under the previous low? There's no value. So gold going way lower. Miners have increased gold production in Africa. What's the effect of China closing the gold paper trade today? I don't think there's going to be much effect, personally. Just a sec. Gabe's hello. It's not Nick, it's Marco, but hello nonetheless. High prices increases supply of gold, decreases demand for regular gold usage, stuff like jewelry. Investors have maxed buying gold. Look, when it comes to gold, I know a lot of you love it. I can see in my videos, when I make a video about gold, it gets 5x or 10x more views. On Instagram, at least. I know for Nick, even on YouTube, he gets some amazing views just talking about gold. Let me ask you something. So you came to the stream, which is great. You're willing to learn. You're open to it. You probably came into the markets in 2025 when gold was raging up. My best advice would be expand your approach. There's so many things out there that you can trade that have a better edge at the moment. Now, if you do the backtesting, you would notice that this rally happens once in a decade. So price is much more likely to stay flat on gold or go down than it is to go to all-time highs this year. For this to happen, you would need to have an event that I don't think ever happened, where gold made 100% in 1 year and then does the same thing in the next year. I don't think it ever happened. Most of the time, you get flat, range-bound, or bearish price action. Now, just quick analysis. Look at this. So the period from 2011 to 2020, that's a decade. Nothing happened. Okay, nothing. Just flat price action. And it can happen again. Look at this. Maybe we should go to the monthly chart. From 87 to 2010, let's say 2002, that's more than a decade. Nothing happened. Personally, I would say this is a lot more likely to happen than all-time highs and a crazy run to the upside. That's just the numbers. So that's why I prefer to look for sell setups. And the fundamentals right now, the interest rates, which is the main catalyst, are bearish for gold. That's my thinking. I will either make money on this or I'll lose money on the trade. So we will see who is right. And personally, like, who was behind this massive push up? Yes, there were institutions. Yes, there were central banks, but a lot of it was retail. At the peak on gold here, if you went to Wall Street Bets, which is the #1 kind of crazy website where you see crazy retail buying or selling and crazy retail interest, just degenerate trading, gold at the peak was the most popular thing on Wall Street Bets. That should tell you everything you need to know. So the dumbest of the dumb money was massively buying right there. Okay? They have lost a lot of money since then. I don't think they're super happy to enter again. I think they got burned. So the retail lately has been getting burned on a lot of stuff. Bitcoin. There was a massive bull run to 125K. Then we went down 55%. The retail got massively burned. Gold we just covered. SpaceX. SpaceX is down from the open, is down 21%. And from the peak, where probably a lot of retail came in, is down 47%. My point being, the retail keeps getting burned, and I think they have finally said it's enough. We're going to step away from the markets, and we need to see a period pass where their thinking resets. So basically, once the retail gets burned, they step away. You need to get a few months, maybe even a few years for them to get interested back again. You need another crazy bull run. Okay, the retail is not going to be massively buying the absolute lows. The people that are buying lows are the smart money. Okay, so I would say there is better opportunities out there right now. And if you're solely a gold trader, I would highly recommend you expand your approach. I was there. I did the same thing as you. When I was starting to trade, I focused on 6 currency pairs. It worked well at the start, but then those 6 currency pairs stopped moving for 12 months. And you can think about what happened to my equity curve. Basically, it was break even or even negative in some cases. So I was taking no trades for 12 months. Finally, I started expanding my approach. I started looking at many different things. I started using the Edge Finder, and that's where things really clicked for me. If you read any of the Market Wizards books, if you listen to any of the podcasts from successful traders, they trade many, many different things. They trade whatever is moving at that time. Okay? So, gold put to call ratio, we can take a look. Huge crash to 3,500 is coming. I would say that is highly likely. Quote report remains bullish for gold. Will Bitcoin go to zero? Nick says DRAM burned out some people. Yes, that's one other thing that got a lot of retail burned. They reduced the total liquidity in it, but still above 80%. Wartime, normally gold increases. Dollar loses value. I see no demand in gold shops. Last year, all people that panicked bought it. Yeah, you had lines. So for gold, you had lines and lines of people that wanted to buy it at the peak. Where are those people now? Well, they lost a lot of money. So they're not super happy to get back in right there. And that's a problem. You do need the retail to get these moves. You need the retail. You need to have some retail interest behind it. SpaceX in 2 years, maybe if a rocket pops, SpaceX will crash hard. SpaceX is an unprofitable company. So personally, the valuation for SpaceX, from my research, the fair price is around 100 or below. So 100 or below would be a fair price. And to be honest, it's probably going to go up to all-time highs in maybe 2 to 3 years. Yes. So if you can buy it at a cheap discount or at a fair price at 100 or below, like 60, 70, 80, it is going to go up most likely. So in the next 2 years, probably we hit all-time highs. But the IPO was pretty bad if you were a retail trader and you were buying this. I'm not buying gold above 3K. It has no value when new mines get open in Africa. So I see a lot of people talking about some long-term facts, or I can read it in the comments, like the mines and the shops and, well, basically the fundamentals, the fundamental numbers. Now, as far as the markets go, the price that you see displayed on the chart is usually never the fair price on paper. The price that you can see on the chart is the price that the investors think something will cost in the future. Okay, especially if you look at stocks. So let's go to SpaceX. SpaceX isn't worth $118 per share. SpaceX right now is an unprofitable company, but people are willing to pay $118 per share because they think in the future the company is actually going to be worth 150 or 200 or 300. So people are not paying what the company is worth right now. I would say for gold as well. People are not paying what gold is worth right now. People are paying what they think gold is going to be worth in the future, or let's say less than it's going to be worth in the future. So the markets, they don't really show you the exact fair value. That's why evaluations for stocks, like stocks are trading way above their earnings. You know, the price per earnings is crazy high. So people are, you can say, overpaying massively. That's why also for SpaceX, a clear valuation with FCF, I think, doesn't matter. Tesla. If you were trading Tesla according to the valuation, you would lose money because you would just be short, because this stock is trading at 100 times its earnings or something crazy like that. It's kind of a meme stock. But that's what happens in the markets. Okay? Gets crazy. Japan discovered golden oceans in American Philippines. They mine in oceans. I don't care. I don't care about that. It's too long term for me. I'm a short term trader, kind of. I'm a swing trader. As far as gold goes, the only thing I care about is the chart on the daily. So the daily chart stuck in a range. I care about the edge finder top setup sprint, and I care about the US central bank. I care about the Fed. Those are the only three things I care about right now. And I care about the Fed because of the Middle East. So you can say I kind of care about the Middle East because the Middle East is the biggest catalyst right now. Whichever data comes out, whatever economic data print comes out at the moment, it won't matter much if the Middle East escalates, or if the Middle East de-escalates, or if the strait becomes open, or if the Bab al something strait gets closed. So the biggest catalyst at the moment is, unfortunately, the Middle East. So you kind of need to become a geopolitics expert. And I would say with the dollar, as far as the dollar goes, if you can catch the pivots, if you can catch when the strait becomes closed, then buy the dollar. And if you can catch when the strait becomes open and you sell the dollar, it's a valid strategy. And it did make me money in the past. For example, when the strait got open, I bought pound US dollar, so I sold the dollar, and I made some pretty decent percentage on that. Before that, I was basically buying the dollar. I can't remember exactly which trade, but I had some decent success. So now I did a pivot again. I basically bought the dollar, which means I kind of sold GU. I didn't do it on GU. I did it on USD CAD. I basically bought USD CAD. Okay. So I want to repeat, if you want to join the free Discord, if you want to trade with all of us, I will post the link now. So in the comment section, you have the link to join. It's absolutely free, or you can join the paid Discord as well and get all of our trade ideas, get all of the premium chats, get access to absolutely everything. And don't forget to use the code Marco to get a nice discount. Okay. Anything on the Nikkei? That's interesting. Let's look at the Nikkei, and then I'll probably be done with my segment. I have 3 more minutes. So when it comes to the Nikkei, for the Nikkei, it looks bad. It's below the 20 MA. The price action is bearish. We broke a key trend line that I was closely watching. We broke that, and the fundamental story is not good. Middle East, strait is closed, oil supply is hurt. You can say oil is going up. Central banks around the world will experience, countries around the world will experience higher inflation, which means the central banks will have to hike rates. And what does that do to stocks? It is highly bearish for the stock market. Okay, highly bearish for the stock market. So the Nikkei, I'm not looking to buy it. I'm not looking to sell it either, but I'm definitely not looking to buy it at the moment. Let me run it through the top setups. Okay. Neutral. Okay, score of 0. That's how I see it as well. Neutral. I'll actually be more bearish than neutral, but I'm not looking to sell it. Put to call. I know someone wanted to see the put to call ratio, so let's open that up. On gold. Kind of in the middle. It's not up, it's not down. What about the S&P? SPX. SPX getting into high put volume, so getting into bearish sentiment. And I know to finish up, I'm going to open up the QQQ. I know someone wanted to see the Nasdaq, which is at a key level of support. This is the time where a decision will be made. Either we hold and bounce, or we actually crash through that and we get into a bear market. So we are below all of the EMAs. That's a warning sign. And now we are sitting at this key level of support. I don't want to execute a position here, but this is a key level. So watch this level. That's about it from me. Thank you very much for watching. You will have the next guest coming in 30 seconds. I will now play a transition video. So let me just find that. Okay. Thank you for watching. I will see you in 2 hours in my second segment, and I wish you good luck. Goodbye.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello. Happy, what day is it? Friday. Friday, ladies and gentlemen. It's almost the weekend. How's everyone doing? I hope you're all well. I hope you all had a fantastic week. Okay, so what do we want to discuss today? As always, we have a 1 hour segment. We've got quite a lot of time to kill together, and then we'll have Alan coming on after me. Patrick, good to see you, my friend. Hope you're well. BTC will reclaim all-time highs sooner than gold. That's a interesting claim. I'm not sure I disagree. I don't really know enough about Bitcoin, to be perfectly honest, to give you an insight there. Let's have a quick look. Bitcoin, I mean, it's rough. It's a very rough market to be involved with right now, especially if you're a buyer. If you're a seller, of course, it's been a fantastic time. Same thing with gold as well. But yeah, I don't know. In terms of reaching all-time highs again, I'm quite optimistic about gold. I'll be honest. My long positions are doing quite well. As I said previously, though, these are tiny positions, so it doesn't really matter too much. But yeah, it would be interesting to see gold start to have a little turnaround, but I'm not sure that's real. Not sure how realistic that is at the moment. Ray Beast, good to see you. Kurtharam. Oh, 2288. Sorry, I always butcher your name. I do apologize. So I'll just call you 2288 as always. Gold and silver doing similar things, both bullish on the Edge Finder anyway. You are right, actually. Yes, let me pull over the Edge Finder. We do have, yes, gold and silver reading bullish, which is interesting. Do we want to be buyers? To me, that's not convincing enough. So my general rule is anything positive for and negative for, it's not worth trading. It's just too close. Too close to be neutral. So normally my threshold is 5 and above or -5 and below. Obviously, I am buying gold, but as I said yesterday, it's a longer term sort of investment style rather than it being a more of a swing trade. Sluggy, how you doing? Hope you're well. James New Model took Dow long in profit till now. Very interesting. I actually just put out a video on my channel about the US markets. It's not super in depth, but it does cover some interesting points. In fact, I've still got some of the charts open here. Maybe we could go over that. If anyone's interested, we can go over that topic maybe later. But yeah, there's some concerns around the markets at the moment, especially the US ones. So with the Dow, I'm going to be honest, this looks a little bit more like a potential bearish setup for me. It doesn't mean I'm going to take it, but just on the technicals, it looks like maybe quite a nice short potential here. Previous structure on the left. So let me draw my tool here. Pretty decent support. We've broken below. We're currently having a retesting this 200 daily moving. What's it called? A 4-hour 200 moving average, not the daily. The 50 and the 100 have crossed bearish. So to me, actually, this looks like a little bit of potential to continue lower. Of course, again, I'm not looking to take that. We don't have in fact, we don't have any bearish readings on the Edge Finder at all today. So it doesn't warrant me going short, but again, it's more of a technical setup there. King of Kings, good to see you. Good morning or good afternoon. 50K will be a gift if it happens. Well, yeah, as Sluggy said, then 40K. Depends where the stopping point, 50K could be a gift for about a week until it goes down to 30K. Then 30K might be a gift until 20K. Do you get what I'm saying? Really depends where you think the turning point will be. MicroStrategy is even worse than Bitcoin. I mean, MicroStrategy essentially is just a leveraged way into Bitcoin, isn't it? As I always say, I'm not a stock guy, so anything I say regarding stocks, take it with a pinch of salt. But yeah, I mean, Michael Saylor, I think from what I've seen, will be the only founder or the only person ever to have seen his own stock go, was it negative 99% twice? I don't think that's ever happened before. I'm not sure where that happened. It was a stat I saw on Twitter. So again, it could be completely wrong. Let me just have a quick look. So this was, negative, about negative 90%. So that's the first real rough side. Then this one is about negative 83. Imagine owning a company and the value of that company dropping 90% twice within 3 years, give or take. It must be stressful being Michael Saylor. I couldn't do that. What's the name of my channel? It's James LNE or Forex James. Actually, if you type in at Forex James XXS, you'll find me. Normally my channel will get dropped in the chat throughout the stream sometimes. Depends how generous the A1 people are feeling. If they want some free labor from me, sometimes I won't get their shout out. I'm joking, of course. Flat here. Also got pounds for strong data. Yes, we did. Actually, let's have a quick look at the pound because we did see cooler inflation from what I remember. Let me just do a quick review. Yeah, so CPI came in at 2.6. Forecast was 2.7. So yes, cooler CPI. What do we have? Unemployment came down to 4.9. I'll be honest, it doesn't really tell me too much. I'm not that interested in the UK at the moment. It is strong. So when I say I'm not interested, I mean, I would still like to be a buyer. When I say I'm not interested, I more mean there's nothing new that, re-peaks interest, no new catalyst for me. A slight problem, again, with that cooler inflation, but not a huge deal. I think inflation is very much a point of interest, really, in terms of, generally speaking, it seems the markets are the markets are expecting inflation to just continue higher. And that's reflected perfectly here. So, we had the initial kickoff with US, Israel, and Iran here. Then we had the de-escalations, the MOU, the peace talks, peace deal, so on and so on. Had almost a full correction back to the pre-war price. Didn't fully get there, but almost. And then obviously we've had the kickoff again. So during this point here, this is kind of when we got that CPI data. It's like, okay, well, oil prices are lower, energy prices coming down, cooler CPI to be expected. But now we're getting oil coming back higher. We've got the straight closed again. Oil reserves are depleting day by day. To me, it just makes sense. I mean, 1 + 1 = 2. We're going to see, or again, my opinion, my thought process, we are going to see oil prices continue higher. Hand in hand, we're going to see inflation higher, 2-year yield higher, and then the Federal Reserve or general domestic market central bank hiking expectations increasing as well. So I would say that's the current landscape we're in, the current regime. Lord be safe. Trump will start attacking soon. Yeah. What did MicroStrategy peak at? Good question. I've got no idea. It peaked at 544, we can say, just round up number. The funny thing is, I was actually really close to buying into MicroStrategy a couple of months ago. It was right here when we saw these bullish candles. I sent it to my team, and one of my analysts was like, please, just do not do it. Just wait a month. If it's wrong, cool. I'm sorry. If it doesn't work out, you'll thank me. And yeah, he was right. So I really dodged a bullet with that one. So yeah, it's definitely not in a good place. But again, I'm not a stock guy, so I don't want to talk too much on it. But from what I have seen, it's not looking good. Getting addicted to this channel. That's the idea. We're trying to indoctrinate all of the retail traders into fundamental trading. That's why we started the longer streams, actually, so we can start a fundamental cult. Actually, I'm not sure I can say that. Obviously, it's a joke. Please don't take that seriously. IMO waiting for... oh, wait, hold on. IMO, the market's waiting for FOMC, etc. next week, do you think? Yeah, I would say the markets are waiting for quite a lot. I think that, yes, the FOMC is a big one. We're also waiting for, obviously, CPI prints to come out or general inflation data to come out. I think we're also, in terms of a bit more of a specific one, dollar yen, I think we're kind of seeing the markets really expecting an intervention. It seems to have died down a little bit. But during this period here, we were very clearly seeing indecision. You know, it was a case of no one really wanted to be a buyer. No one really wanted to be a seller. And I think that's kind of the general consensus. Yes, we are getting dollar yen grinding higher, obviously, on the back of the stronger dollar. And the carry trade, you know, the dynamics of dollar yen do continue. But yeah, I think there is a lot of sort of waiting to be done at the minute, which is quite frustrating. Also, James, working new cross-asset momentum strategy right now on stress testing, then run on demo for a few months. Very nice, Ray. I hope it works out for you. I think momentum strategies, generally speaking, are sort of the way forwards, really. You know, trend follow, the momentum. It's, yeah, I'd say it's probably the easier approach. Gold has more downside compared to Bitcoin. They mine a lot of gold if price stays high. Yeah, I wouldn't argue that, but again, I do understand gold a whole lot more than I understand Bitcoin. So it's easier for me to say, or easier for me to put an opinion about gold than Bitcoin. So I don't feel like I'm in a great position to really, you know, put much onto your point. You know, if anyone is new here, you might be a bit confused by that, but my philosophy with these streams is I try my best to not talk on things I don't understand. I might talk about stocks like we did with MicroStrategy, but I won't really talk that much because, again, I don't want to sit here, talk about it, and the information is just wrong, and someone makes a decision based on what I said because I'm not well educated there. I'd much rather talk about central banks, inflation, oil, yields, FX. That's kind of what my thing is, if that makes sense. So yeah. True, James. Goal is to keep it simple. Absolutely, yes, 100%. Gold demand outstrips production. Yes, I would say so. For the most part, yes. Unfortunately, I'm a bag holder with MicroStrategy. Bought it around 350. Might start DCA. I invested too much to get out. Oh, that's a painful one. And that is, I hate to say it, I really don't want to tell you this, and I feel bad, but that's the mindset that gets people into trouble. I by no means think MicroStrategy is going to go bankrupt. I don't really think that is going to happen. As far as I'm aware, they do have quite good cash reserves. However, I don't know if the pain is over. And I think it's the same for gold as well. If we really zoom out and look at what the landscape is, and I'm going to group gold and Bitcoin together here because it seems like they are pretty much following each other given the current environment. So again, we've got higher oil prices, we've got inflation, we've got general risk off anyway. It just doesn't seem like a good environment for these two markets specifically. So maybe this is the point to buy strategy. Again, this isn't financial advice. I'm not telling you to buy because I'm not involved. That doesn't feel like the right thing to do. So what we can do, if we want to do some very simple technicals, we can just gauge, is the market at fair value or overbought, oversold? What's the situation? And an easy way to do that is just with Bollinger Bands. So if we look, what we're seeing at the moment is actually really nothing convincing. We are below this 200 moving average on the weekly. We did attempt to reclaim and continue higher. We've completely rejected. We're seeing very little momentum to the upside on the weekly. The RSI actually isn't really that oversold. Yeah, it's tricky. I'm going to be honest. It might be worth just taking the hit. So this is the thing that a lot of traders get wrong. I don't want to be patronizing because I don't know your experience level, but I'm going to talk more generally here. the problem is when people get into these positions, as you said, you're in too heavy to get out, but you don't know when it's going to stop. It could just get worse and worse and worse. You could see this problem for the next 1 to 2 years. There are expectations, actually. I've seen a couple of reports saying that the Iran situation that we've got could very easily last another couple of years. There's not really a definitive end in sight. And if that is the case, you might be in for a much harder time than what you're currently in. So you're currently in a position where it's a case of, okay, let's say, for example, you're down, I don't know, let's say 30% on your investment. That's horrible. No one wants to be down 30%. It's painful. But being down 30% is much better than being down 60%. It's much better than being down 40%. So if I was in the position where I was down significantly on a stock, and you get to a mentality where you've invested too much to get out, that is the signal to get out. You know, again, it's painful, but you've got to bite the bullet, and that's part of our job. You know, you've got to sometimes sit down, have a talk with yourself, and you do get in these painful situations. Again, that's part of the job. There will be times where you make mistakes, or you get into a bad position at the wrong time, whatever it may be. And again, you've just got to deal with it. Our job this is the last thing I'll say. I know I'm harping on a little bit now, but our job inherently goes against the human mentality. You know, our brains are wired for pretty much negative risk reward. Our brains are wired to be risk averse. So in this situation, you're suffering with, is it called loss evasion? I'm not sure exactly what the term is. I can't remember. But the only thing you're doing at the moment is saving yourself the mental pain of closing right now, because you're hoping it's going to come back. Of course, you know, it's quite obvious. But then, you know, you're negating the idea that it just could get so much worse. You know, it could get, you know, tomorrow strategy could fly. It could increase 500%. But what's the likelihood of that actually happening? Anyway, we'll move on. Again, I don't want to keep harping on the same topic. It's never a mistake if you're making money. I would disagree with that, actually. I think there are right and wrong ways to make money, especially in trading. You know, if you go full margin on a trade, let's say you've lost 10 trades in a row and you've got so angry and so upset, and then you go in with, let's say 10 lots, which is full margin for most accounts anyway, and you make, I don't know, let's say £20,000 or dollars. Yes, you made money, but that wasn't a good way to do it, because you very easily could have just lost everything. I get what you're saying, but I think realistically, it's probably not quite the right statement to make. Gold cost of production is $1,500 an ounce, and there are a lot of places where gold mining could start when prices are high, places where cost of production is above $3,000 an ounce. Okay. Yeah, I think gold's in an interesting spot. I think the demand for gold it's not gone anywhere, I don't think. I think it's a case of gold has had such an incredible rally to the upside recently. I'm saying recently, over the past couple of years, it's had an incredible run. Naturally, it was due a pullback anyway. And obviously the catalyst that happened was just the catalyst. You know, it drove a move that was due and warranted in the first place anyway. So it is what it is. You know, you can't really have a run like this continuously. We are going to see that pullback. If we put it on the weekly time frame, you can see it even better. Look at the run we had. And this is actually why I'm buying. I think this is just a really good pullback. You know, it's a 30% drop from its peak, from its high. So yeah, I think, again, it's one of those moves that on lower time frames, it looks horrible. It's painful to be involved with if you're a buyer. But if you have some cash, you know, if you've got the bankroll, I need to be careful how I word this. I'm not saying you should buy in, but I personally think that this is a good area where I'm happy to start buying in with low size or small size frequently to build up a larger position over time. James, your voice is crazy cool. Thank you very much. I don't think I've had that compliment before. I'll take it. The painful thing is also when you get out of a stock and then it goes back up. Exactly. Yeah, no, it absolutely is. Yes. But again, you've got to think in probabilities. What is the likelihood that actually, you know what, let's just pull the chart up rather than talking about it again. So I think you said 350 was your average price. So what's the likelihood now? And you've got to think about this critically. What's why is my thing not working? There we go. What's the likelihood that strategy rises basically 300%? I would say it's almost none. Almost. I'm not saying it's impossible. Of course, anything's possible in the markets, but I really don't think this is a good likelihood for you. So I would say, again, cut the loss, save yourself the pain long term anyway. Risk aversion, that's the right one. Yes, thank you, Yoshi. All of those who pledged and leveraged gold will suffer till 2030. Interesting. Why do you think 2030? It very well could happen. Absolutely. The emotional weight of loss is greater than winning. That's exactly it. Yeah, 100%. I think that's a well-known thing, actually, that losing is, I think it's 2 times more painful than the gratification of winning. So if I gave you, let's say $10,000, you'd be grateful, you'd be happy. I'm sure you'd be very happy and over the moon with that. But if I took 10,000, you would be, the pain would be double. Do you see what I'm saying? And you've got to think about that when trading. The gold rally was insane. It was, yeah. Gold was basically free money. Obviously, in hindsight, not quite as easy as that in reality. But yeah, in hindsight, gold was basically just buy and hold. You didn't have to do anything. James, also JPM longs looking good. Is it? Let's have a look. Again, I can't look at I don't pay attention to financials and things, so we'll stick at the just technicals here. I mean, yeah, it's bullish trend. Pre-market looks like it's going to open higher. Generally speaking, I would say, yeah, probably quite a good buy. I mean, look at this trend, actually. It's beautiful. The strategy will go up in 2027 bull run. The thing is, with cryptos, the amount of times I've heard we're going to have a bull run and it's just not happened. It's crazy. I mean, crypto Twitter just constantly praying for a bull run for, what, the past 1, 2, 3 years? I don't think we've really had anything. Because Kevin Washington office till 2030. Okay, well, that makes sense. Yeah, maybe we'll see. Embrace the pain. Yeah, James, what do you think about Bitcoin? So we've just been talking about the sort of more broad idea of Bitcoin and crypto, but I'm in 2 situations. I think, technically speaking, it could be a fantastic buy at this level, just because it's a really obvious weekly level. Keeping it super simple. But then the real issue comes that this is, again, actually, because it's so obvious, is it actually more likely to break at this point? We're on a really strong daily downtrend. We've got no sign of significant buying. And historically, I don't really think we're at an extreme level of pullback. So, if we look at Bitcoin's history and the way it pulls back, or the way it has pulled back historically, these are really violent, large swings to the downside. So if we look here, we've had almost an 84% pullback here. This was 57. This was almost 80. This one here is currently about 50. So this is on actually the lower end of the historical, whatever you want to call it, like crashes, pullbacks, whatever type of term you want to use. This is still on the lower end. So if we take, let's say 60% could be sort of an average, give or take. We actually might end up around 45K. And again, I'm not looking into the sort of fundamental side of Bitcoin because it's not my expertise there. But based on just, again, the historical ways that Bitcoin behaves, it wouldn't surprise me if we do end up towards 40K. I keep thinking about the fact gold took 25 years to recover from the 1980s. That is a very good point. Yeah. Hi, James. After you follow several pairs on the Edge Finder, how do you filter in the watch list on the top of that? Excuse me. Okay, that's an interesting question. So it's actually super simple. So I don't. I think we spoke about this yesterday, actually, but I don't take everything. So I'm not going to add all of these to my watch list. The way that I work with the Edge Finder is I'll pair on other external factors. So central bank forward guidance, interest rates, the geopolitical landscape, the risk sentiment, things like that. So at the moment, I wouldn't take all of these. I would probably take the first maybe 5, depends on the scores, of course, but generally 6 and above. So we take Euro, Swiss, Pound, Yen, Aussie, US dollar, China 50, and Pound Swiss. Out of those ones, which do I really want to pay attention to? Again, based on what I just spoke about, the geopolitical landscape, central banks, so on and so on. Well, it puts me in a position then of, well, I do like Pound Yen, so I'll pay attention to that one. Aussie US dollar, right now, actually, I don't like that one because we've got, again, the 2-year yield rising. We've got the idea that the Fed is going to hike rates. We've got oil rallying. The US dollar is just doing well on a price action basis. Do I want to be a buyer? Probably not. So I'm not going to pay attention to this one. So that's how it works. Then what the ones I do like, well, then I'll add them to the watch list and I'll pay attention to technicals. If I get an entry, so let's say CAD Yen, I don't think it's there anymore, is it? No, it's not. But at the time, CAD Yen was bullish. I need to remove it. So then what I'm doing is looking for an entry. So I'll draw the fib from low to high or high to low, depending if I want to buy or sell. When it gets towards the entry, I'll go back to the edge finder. Is it still there or is it not? If it's not still there, then there's, it's cool. It's done. The trade doesn't exist anymore. If it's still there, okay, then I'll take the entry. It's really that simple. Like Pound Yen actually is a good example. I keep forgetting to take this. I need to do it. I'm going to set an alert actually, because every time, I think for about a week, I've been saying I want to get in Pound Yen, and every single time after stream, I completely forget to do it. So I've got an alert, so I'll get into this one. But this is the same idea. So the entry is valid. We've pulled back to the fib. We're currently at the previous resistance, break and retest pattern. Again, we've got Pound Yen on the edge finder with a score of 6. Everything's aligned. The technicals are there, the trends there, the fundamentals are there. We're going to go in. The swaps are there as well with the carry trade idea. So yeah, beautiful stuff. Hold on, I missed a few messages. Let me see what's been said. Went long Aussie US dollar after seeing +7 on the edge finder, 38% fib on the H4. Seems to be stalling at the H4. Yeah, I mean, we just spoke about Aussie US dollar actually. I think technically speaking, it looks really good. And this is one of those situations where everything does look good. The edge finder's bullish. The technicals here look pretty nice. But again, given the fact that oil is doing well, we've got the 2-year yield rising. We've got the 10-year yield doing quite well as well. We've got the US dollar that seems to be holding up, possibly heading back to 102. I just don't really feel that comfortable doing this. And then we've also got expectations of the Fed hiking rates at least once this year, and then again in 2027 possibly. So yeah, we'll see. But it's those things that are, I do take into consideration. Gold will not be used as a currency. It's either CNY or USD as dominant settlement currencies, and everyone wiped in between. Yeah, I don't think anyone is suggesting gold will be the currency. I think the idea is maybe gold will be used as sort of the reserve. You know how the dollar used to be backed by gold, and it's not anymore. I think that's kind of what the thesis is at the moment. Whether that will happen or not, who knows? I don't think it will. I also don't really see the US dollar being replaced anytime soon. I think it would be an extremely difficult job to dethrone the dollar as the world reserve currency. I'm fairly sure it wasn't BRICS trying to do that and they gave up. I'm fairly sure that was a thing at one point last year. If Walsh stays in office till 2030 and wait, what? And that may be bearish for gold. Why can't be bearish for Bitcoin too? We'll see. Euro dollar. Yeah, we can have a look at euro dollar in a second. Hey James, very interesting video. Just watched you post about an hour ago. Yeah, thank you. That was the one about the stock market that I was talking about. Again, if anyone wants me to go over this, I can. I'm not going to do it. I did just publish a video about it, so feel free to go and check that out. But yeah, there are definitely some warning signs in the US markets at the moment. Okay, so euro dollar, very similar to what we were just talking about regarding the Australian US dollar. I really do prefer going short, and the reason is because everything we've spoken about, with oil prices going up, inflation expectations up, 2-year yields up, 10-year yields up, the US dollar is holding up well, Fed's hiking rates, or seems like they're going to hike rates. And as we know, obviously the euro and the US dollar are inverse. So when the dollar strengthens, the euro naturally weakens. That's just the dynamic that they both have. So there's that idea. But then there's also the the technicals that look really good. So we've got the previous support here through the daily time frame. We've broken below, we've retested, we've pulled into a 50% retracement. The daily time frame trend here is bearish. And it actually does really look like we're in for a bearish continuation here. So that's my idea. And then we've also got, a lot of left side traffic here that could see a bit of a correction. And then historically as well, actually, Eurodollar does look really interesting. So if we go to annual seasonality and we isolate Eurodollar, hold on, let me find it here. Yeah, so you can see, actually not quite yet. We are in for a little bit of a bullish run. But then when we get into sort of mid-August, the end of August, we have a really bearish run into pretty much the end of the year. So that's another thing to take in mind. And then we could actually go out to the monthly time frame. And we can look here at the pattern that we continue to see, where we get the lower high, lower high, lower high. Every time we form this lower high, we end up having a significant run down towards parity on Eurodollar. So there is an idea really that Eurodollar does have significant downside to come. So we'll see if that happens, but that's the current idea I've got in Eurodollar. Although, having said that, I'm fairly sure the Edge Finder is bullish, which does put a little bit of a spanner in the cogs. So you can see here, Eurodollar bullish with a score of 4. So not ideal, but I think the framework is there. So realistically, what I'd need to see to get short Eurodollar is for the Edge Finder reading to flip bearish or back to neutral at worst case. I'm long ZAR yen. The carry is so good, but if metals crash, I'm cooked. Yeah, you are in a little bit of a risky position, I would say, but I think the idea is definitely there. Major Chinese commercial banks have fully suspended all. Yeah, we spoke about, oh, they fully suspended it. Okay. Last we spoke about yesterday was that they massively increased the margin. So I'm guessing, yeah, maybe they have completely suspended it then. Aussie CAD probably more interesting. Yes, I think Canadian dollar probably is quite a good buy at the moment. Again, given the oil strength with the correlation between the two, yeah, I would say it's a pretty decent one. Australian dollar caught strong relief rally this week. Yeah, I'm fairly sure we had pretty good employment data for Australia yesterday. I think it was. What's my channel name? I'll tell you what. Hold on. Let me. I'm not, yeah, I don't think the A1 guys are actually in the office yet. So what I'm going to do is I'm going to just do a bit of self-promotion because I've been asked that a few times. There you go. I've just dropped in the chat. That's my YouTube channel. I hope the A1 guys don't mind. Okay, so hold on. Let me just catch up where we were. Where were we? Okay, so diamonds are also a hedge against monetary debasement. I don't really think anyone cares about diamonds though, because there's the big thing about diamonds are actually pretty worthless. The only reason diamonds are worth anything is because a guy said so. It's a case of marketing over actual scarcity with diamonds. And we've also got the new technology where you can basically just make diamonds in a lab, and they passed generic diamond tests and things. So I'll be honest, I think diamonds are actually one of the most useless rocks on the planet. The only real cool thing about them is that they're so robust. And they're shiny, which is always nice. When do you set your SL at the anchor of the fib? When do you decide to take less SL? That's just a really simple one, actually, Christoph. So it depends on the previous price action. So in this case, on Eurodollar, you can see I would have a full fib at the fib anchor. The only way I wouldn't do this is if, first of all, if the stop loss was wider. So if I had a stop loss that really killed the risk to reward ratio, I might reduce it a little bit. But also if we had minor structure. So if we had like a little bit of a high here, then I might actually just put the stop just above that minor high. That's it. That's really all there is. It's either based on prior structure or it's based on the stop loss size. If the stop loss is just too big, then yeah, I'll obviously reduce it to try and maximize the R&R to a reasonable point, of course. AI can make more gold discoveries. Robots can dig 24/7. That's an interesting point, actually. I've never thought about that. Yeah, maybe. there was an interesting point actually where I made a video earlier this year, probably 2 months ago at this point, where I looked into what would happen to the markets if aliens came, if aliens were fully disclosed. And that was quite interesting. It didn't really get any traction. It got like 200 views. But the idea really is that if, we had, the reason I'm talking about this is because we had the UFO, disclosure things by the US government. So it piqued my interest. I quite like the idea of aliens and space and things. It's one of my little passions. So if aliens were disclosed and it was like public knowledge and all these things, would it become a case of that would mean that gold and all these precious metals and things that we value on Earth are actually just really common in the universe? And then, if aliens came, would they bring those things with them en masse? So then, our markets would have to completely reprice the value of things like gold and platinum and so on and so on, and silver, copper, maybe. But again, that's a complete hypothetical, but it is an interesting thought, I think, or I find it interesting anyway. About Euro New Zealand, you mentioned dollar strength. Euro naturally weakens, especially with New Zealand being strong currency. Would you fancy it? Yes, that is a good idea, actually. Yeah. Let's have a bit of a look. What do we see? So this is a bit of a tricky one. Where would we draw the fib? From this high or this high? I think I'd have to go with this high just because it is the previous one. So I don't really use the 32.8, but in this case, you are right. The technicals look quite nice. The only danger I see is just this support here. So let's say hypothetically we entered at market price. We had a stop maybe just above the 61.8, because in this case, that would also be above the 200 moving average. It'd be a pretty nice support, resistance level for us. Yes, so that would give us a little bit of an issue of quite a strong potential of rejection at this level. So the R&R realistically would be maybe a 1-to-1 at most, depending on exactly where your stop is, of course. So the risk reward is imminently not great. However, if this level does break, there's a lot of room here to the downside on the left. So it could be a case, actually, we see a bit of a move like this where we actually have a really long-term run to the upside, consolidation on the left, and then we correct a large portion of this left side. Maybe that could be an idea. But yeah, it's not ideal for me at the moment, but yeah, we'll see. I think the idea is there to keep on the watch list, and maybe if we do see worse data coming out of Europe, maybe that could be an idea. Thoughts on dollar CAD longs? I wouldn't like the idea of dollar CAD longs, just because I would say that's kind of trading two strong currencies against each other at the moment. We've got oil that's doing well, the US dollar is doing well. So I think there's probably better opportunities really in the markets other than dollar CAD. Maybe dollar Swiss actually would be quite a nice one. So again, we've got a pretty nice carry dynamic. The dollar's strong. So yeah, short term, maybe dollar Swiss could be a nice one. Again, as we always talk about though with the Swiss pairs, is the longer term downtrend that we just find ourselves in continuously. So dollar Swiss short term could be quite a nice play to the long side, but then long term actually might pivot short if we end up reaching this 200 weekly moving average. So something to keep in mind there. James, you seen The Mentalist? I'm addicted to the show. No, I've not. I don't really watch shows, to be honest. I started Yellowstone. I just couldn't finish it. I got distracted. What else did I watch? I'm watching Ted. I'm not sure. Ted, I don't really see anything about it online, but the Ted series is quite funny. I've been watching that at nights with my girlfriend. But yeah, no, that's it. Don't really watch too much. It's just, I just can't concentrate on series. It's too much of a time commitment. I've got other things to do. Hello all. Hello to you as well. Thoughts on Euro Pound? I would say continued weakness, and I do quite like the pullback we're having. But again, there's no edge finder reading for Euro Pound at the moment, so it's a little bit of a issue on that front. However, what we were previously paying attention to was this daily support level on these streams. So we were looking at this, and I really wanted to see a pullback into this level, the break, retest, and continuation lower, but we just didn't get that. So I think realistically, at this point, now we are starting to see a pullback. I would go back in for the same idea. Relatively tight stop, because this would allow room for the 200. It would allow room for this sort of wick to maybe get retested. Actually, maybe a slightly wider stop there. And then, yeah, maybe a continuation to the downside. And the reason I really like Euro Pound shorts, especially at the moment, is because the behavior Euro Pound just follows. So this market typically has really good mean reversions. So either short-term mean reversions, like here we have, runs to the upside, runs to the upside, runs to the upside, and really good corrections back down. So we've got the short-term aspect. But then longer term, we see the same behavior. In these situations where we have really longer term runs and then a correction back down. Long-term run, here we have a bit of a consolidation period and then back down. Here we have a run and then consolidation period and then run back down. And it's kind of what we're seeing here. We've had the longer term run to the upside, consolidation period, and now we'll end up coming back to the downside. So I think Euro Pound is definitely a good option. But yeah, there is nothing here for me until we reach this previous daily support as a break and retest. Thanks for the free value you give daily. If fundamentals and technicals are aligned, would you enter the trade if the current risk sentiment is opposite? It depends how much, but I appreciate the support. So yeah, it depends on the risk sentiment, like what's driving it. So if it's, a pandemic, for example, or a war, probably not. But if it's just day to day, like, I don't know, let's say we had a big data release that swayed risk sentiment, then yeah, probably I would. But yeah, it really comes down to exactly what's driven it. So if it's again, a really large long-term driving factor, then yeah, I'll pay attention to it. But generally speaking, day to day, then not really. Because the day-to-day fluctuations in sentiment are generally what drive a lot of the sort of pullbacks and things, and that's obviously what I use to get in. So if I was always trying to avoid risk sentiment in either risk on or risk off to try and benefit my direction, then likely I actually wouldn't end up in very many positions at all. Euro Aussie. Yeah, I mean, pretty nice downtrend. It seems I've actually missed a position here. Maybe. Yeah. So it seems like we were at some point, I can't remember when this was, but at some point we were looking at this sort of fib retracement. So yeah, I would say downside looks like the most straightforward way to go. However, I don't think we've got the edge finder. Yeah. So the caveat really is the euro is getting a bullish reading, but so is the Australian dollar. So you can see Aussie CAD, Aussie Swiss, the euros here, euro dollar, euro yen, Aussie US dollar. So again, it's kind of conflicting. We've got two pretty decent currencies in terms of strength. Obviously, it comes down to relative strength, of course, but again, it kind of comes back to the opportunity cost. I think opportunity is slightly better elsewhere. China is making the CNY stronger, and if its value drops, they could sell gold. So other currencies see CNY as a strong currency for the long term. Yeah, yeah, that's a good point. Waiting for DAX short. DAX short. Yeah, I think we are. I mean, I've been saying this for quite a while, but I do think we are in for some downside on the indices markets, the indexes, and equities as well. But it really comes down to when is that going to happen? I think the bearish flags or the red flags are definitely in place, but I don't think it's enough yet. I think we need to see a real catalyst for that to happen. Whether that's the Fed starts a hiking cycle, that could definitely be one. But at the moment, there isn't that thing to really kick off a bearish move or a crash or anything like that just yet, I don't think anyway. On a technical perspective, it does look okay. This is a 50% retracement. We are sort of retesting this 200 moving average. But then if we just, zoom out here, we are stuck in a sideways range. There's not really any direction. There's no bearish reading on the edge finder for it. So I do align with the bearish idea, but I think it might be a little bit premature. However, of course, that's just my opinion. If you're waiting for it, I assume you've got your own reasons, so that makes sense. Hold on, let me just check this for a second. Okay, Sorry, just making sure I wasn't missing any important messages about the stream. So we've got about 15 minutes left, and then we have, I'm fairly sure Alan, let me just double check. Yes, we've got the one and only Alan Perez coming to take over the show in about 15 minutes. So if there is any chart requests, anything you want to talk about, let me know, or forever hold your peace, at least until tomorrow. Until then, let's have a little meander through some of these markets. Am I still long pound yen? You know what? I wish I was. No, I've not even gotten into pound yen yet. This is the problem I've got with covering on stream. I'll cover so many different markets and ideas. By the end of it, I'll completely forget what I've actually spoken about. So with pound yen, I've been watching this entry for about a week, and I think every stream I'll be saying, "Oh, I'm going to get in pound yen. I want to go pound yen." I've still not done it because I just keep forgetting to do it. So I've set an alert. So I will get into pound yen at some point. I would very confidently say that. But no, I do like it. I think the trend is completely healthy. I don't know what's happened to my indicators. Hold on. There we go. The trend is still really healthy. We're holding the 50% retracement. We're holding the previous level of structure on the left. The RSI is fine. We're not overbought or oversold, so that's cool. And the edge finder is bullish with a score of 6. So everything's aligned for pound yen. I really do like it. I'd say the only risk really is, and I'm not going to cover the fundamental side, because even if we do see a short-term pullback based on the weaker UK data, it's carry trade, it will very likely continue higher anyway. The real risk, I would say here, is an intervention. Now, the interventions don't have as much of an effect on pound yen as they do with dollar yen. So you can see the interventions we have actually only really come to this 100 daily moving average. So if this position does get stopped out, so let's say we take it, the MOF intervene and the market comes down, I'd actually really happily buy back at this 100 daily moving average. And the same thing with dollar yen. So with dollar yen, it does the same thing, but down to 200 daily moving average. So dollar yen, I wouldn't want to be a buyer here. I just think it's a little bit too high for my taste. So I'd rather wait for an intervention. I'm not going to try and sell it, and I'm not going to try and buy back small, in the middle of the intervention. I'd rather just wait and fully deploy at this 200. If it breaks below, fine. Then obviously the idea of this sort of behavior is broken. But that's my thought process at the moment regarding yen, or yen pairs anyway. Waiting for gold longs. Very nice. I think Nick's in gold longs as well. So am I. I think there is definitely the sentiment picking up with the idea of being a buyer of gold. And the edge finder has flipped bullish as well. Gold was bearish, like 2 weeks ago, give or take. So edge finder flip. It seems like we are stalling around this 4,000 level and this daily and weekly level of support. So yeah, I think the idea is there. But then again, it comes back down to sort of the environment we're in. It's not that conducive for gold still, again, with the oil prices, inflation, Fed rate hike expectations. So it's a tricky one. I'd say, again, the argument to be a buyer is definitely there, but also the argument to be a seller is there. And I think that is quite well reflected actually at the moment with gold. We're seeing quite a large battle between the bulls and bears. And I think it is those two kind of ideas being expressed at the same time, that gold has had, the 30% drop from its all-time high. Technically, it's a good discount. I used the analogy yesterday that, if you were buying a car for, let's say, $10,000, and you went to the dealership and actually it's only $7,000, that's a pretty good deal. I would take that as a nice hefty 30% discount. So it's more of a looking at the value rather than being a case of the fundamentals at the moment for me. And again, that's why I've got the staggered DCA approach and not a swing trade, because I'm not looking to get in for a short-term position. I'd rather build a longer-term base at a good discounted price, looking for a long-term continuation higher. Whether that takes a year, 2 years, I don't know how long that will take. But that's why the size is so small, so I can withstand any downside that does come. The Fed's 28 to 29 July meeting is the key event markets are watching. Yes, absolutely. It seems like the markets are definitely expecting the hikes at some point, maybe not in the next meeting. Actually, what we can do is pull that up. We can actually take a look together on the CME FedWatch tool. Let's see. What do we expect for July at the moment? So 66.3% probability of a hold and a 33.7% probability of a 25 basis point hike. So yeah, majority expectation is still a hold. And then we go through September. If I can click it, what do we have here? So yeah, only a 20% probability of a hold, and then actually 25% probability of a 50 basis point hike. Interesting. Sorry, not 50. Is it 50? 25, give or take. Yeah, sorry, I'm getting all my numbers mixed up. I'm not great with numbers, so it takes me a minute to do the maths. But yeah, either way, as we can see, as we go further down the line, we are seeing this increased probability and expectation of Fed hikes. So that's one thing to pay attention to, is do we get a dovish Fed? If we do get a dovish Fed, that could cause quite large repricing within the dollar, and that would be very beneficial for gold. The likelihood, though, of that happening, I think, is quite minute. I don't think we are going to get the Fed or wash. I don't think we're going to get a dovish Fed. I just don't really see that's going to happen. I don't think they're going to use the lower CPI as a crutch. I don't think they're going to say, you know, inflation's come down, the need for rate hikes just isn't there. I really don't see that happening, because I think they're smarter than that. I think it's a case of, yes, CPI came down, but since CPI came down, oil has rallied back to the upside. I think they're going to be fully aware that CPI is very likely to climb back to being quite, well, not high, but, you know, towards where it previously was. But of course, we'll see. As I always say, I'm not nearly as intelligent as the people at the Fed. If I was, then I'd be far richer than I am now. ARK Investors Cathy Wood remains among Bitcoin's most optimistic institutional investors, maintaining a bull case target of 1.25 million by 2030. The thing is, Cathy Woods, I'm fairly sure, has built herself a really bad reputation. So if she's saying she's bullish, she's kind of similar to Jim Cramer, although I'm fairly sure she pulled it back. I think actually Cathy Woods might have restored herself a little bit from what I remember. But yeah, I would take that more as a Jim Cramer approach, to be perfectly honest. Jim Cramer signal is generally quite a good one, actually, funnily enough. Anyway, 10 minutes left. So let's do another review before I head off and hand over the show to the next guest. New Zealand US dollar. Actually, you know what? It comes back down to the dollar. I don't really want to be short dollar at the moment, as much as it is painful. I hate to see a really strong reading on the edge finder, but I can't take it. It's one of the most painful things. So I'm going to have to ignore that one. Pound Swiss. We've been paying attention to Pound Swiss, but again, it's one of those ones where short term I quite like it, but long term it gives me the spooks. If I can, sorry, I can't type today. It's Friday. Give me a break. Watch my stream, guys, please. Just took a trade I gave. I'm going to be honest with you. Trading mind. No one here is going to go to your stream to take the same trade as you. Nick has done a fantastic job of building a very intelligent and well-reasoned community. So I don't think this is the place to be promoting some free signals on a stream. Unfortunately, I wish you the best of luck, but this isn't the place to do that. So Pound Swiss, what were we talking about? Yes, so Pound Swiss on the H4 looks really good. You know, we've got a really strong bullish trend. The daily time frame, really strong move to the upside. We've established a really nice daily trend as well, or currently establishing, or have just established. So short term, it looks fantastic. It's more just a case of waiting for a pullback here into these previous highs, into the fib, and then a continuation higher. I would really expect this. Normally, a little bit of a tip for you guys, if you do use moving averages, something you will notice is when we get new crosses and a new trend, we often do see a pullback towards those moving averages, a bit of a retest, a bit of a pullback, and then a continuation. So I would expect something like this to happen. So I am still bullish on Pound Swiss short term. But that brings me back into what we were talking about with Dollar Swiss and the higher time frame trends. So I wouldn't want to hold this trade forever. This isn't a trade I would have a trailing stop. This is one I would have a hard target. So if we look at the monthly, very bearish overall trend. I mean, look at this, fall off a cliff just continuously. Weekly time frame, same thing, obviously. So actually, let me just align the chart. There we go. So what we often see here on the weekly chart is, oops, there we go. Yes, we have these bullish runs, but we never oh, I say never, obviously, in recent history, we haven't ever been able to hold above this 200 weekly moving average. So I'd quite happily take a long position into this weekly moving average and then possibly actually look to fade the move and look to go short and continue this overall downtrend that we're in. So it's exactly what I was telling you about the dollar Swiss idea. It's like the short-term trade idea looks phenomenal, really good. Fundamentals there, trends there, technicals there. The entry looks aligned, just a case of waiting. But again, the higher time frames look a little bit of a trap if you are holding too long, because there is an idea actually. You would get into a position, you trail your stops, trail stops, and then you get to this 200 and actually just reverses and continues lower quite violently as well. So that's kind of my concern with that market specifically. Thanks, James. Subscribe to your channel. Thank you very much. I appreciate the support. A1 Trading is loyalty. Yeah, I mean, I always say, obviously I'm a bit biased because I'm a guest here, but yeah, the A1 guys include even the non-A1 guys that are guests like myself, and a few of the other guests you'll see on stream. It's a fantastic community that's been built here. Very rarely there's problems. You do get the odd bad apple, but generally speaking, it's a fantastic place to be. Pound dollar pullback. Yeah, we'll take a look at pound dollar in a second. I've got 4 minutes left, so I'm sure we can squeeze it in. Watch your new video, James. Great stuff. Thank you very much. I appreciate that. I'm obviously a small fish in a big pond, but I do appreciate the support as always. Pound dollar. So pullback on pound dollar. So yeah, I mean, it comes back to exactly what I say with euro dollar, Aussie US dollar. Fundamentally fantastic. We obviously want to be buyers if we're using the edge finder, but again, if we take the external factors like oil prices, the Fed, so on and so on, as we've been discussing, this trade kind of actually does scream to go short, and that puts me in a position where I'm getting pulled both ways. I'm getting pulled to be a buyer, I'm pulled to be a seller, so I can't really justify doing either one, because what that does is if I go short and this market rallies, then I'll sit back and I'll say, oh, I should have followed my plan. The edge finder was bullish. That's what I do. I got it wrong. That was my mistake. That's going to be really annoying. If I do go long and it goes short, then I'm going to say, oh, well, it was so obvious. Oil's rallying, got the Fed. It doesn't benefit me either way. Obviously, if it works out, fine. But it's one of those ones where if I did take the trade and I was wrong, I would sit back and I'd just kick myself. So I don't want to do that, because obviously, as traders, part of our job is protecting your mental peace and your battery, if you will. I'm not really sure how else to explain that, but hopefully you understand what I'm trying to say. How do you use Bollinger Bands? What's your thoughts on them? Great job explaining charts. Thank you very much. Bollingers I don't really use them. I don't trade with Bollingers necessarily. Sometimes I do in a very rare situation, but it's definitely not a core part of my trading. Excuse me. So what I do sometimes view is more as a overbought or oversold situation. So let's say, back here, actually, let me zoom in, hold on. Let's say back here when we had, the really weak dollar. And, let's say right here, it's a case of, oh, we just had a load of momentum. The dollar's weak, pound dollar's rallying. Do I want to be a buyer? Well, actually, this H4 looks like it's just rallied to the upside. Do I really want to buy it here? Because generally speaking, we don't break and hold above 200 Bollinger Bands on very liquid FX markets on higher timeframes. Lower timeframes, Bollingers are pretty useless. But higher timeframes like the H4, the daily, the weekly, the monthly, I mean, you can see it here. Look at this weekly time frame. Come up to the Bollinger, and then we completely reverse back down. We break below for a little bit, and then we break back above, and then we just ping pong up and down. So I'm not saying, I would never say that this is a great indicator to trade from, because there are going to be times when the market rallies and rallies and rallies. This is a weekly time frame, for example. If you were buying right here, you would have been in a world of pain for a couple of weeks. And yes, you might have caught some fantastic upside after that. But during this period, is it actually worth doing? For me, no. Excuse me. So that's how I do it. It's more just a gauge. Do I want to be involved? Do I not? What's the situation? What's the state of the market right now? I think gold is really difficult to trade. Yeah, gold is definitely in a difficult spot. Simo, hello. Good to see you, my friend. Hope you're well. I've got to head off in a second, so I'll make this quick. Do you feel the market is slow these days? Actually, no, definitely not. I would say the markets are quite fast moving at the moment, especially with all the headlines and Iran. We've just come out of the tariff period as well. There was a situation, or there was a period between tariffs and Iran where, yes, it was quite slow. I think there was about a month where I just couldn't really find any trades I wanted to be involved with. It was quite frustrating. Thoughts on SpaceX? I don't have time to do that, unfortunately, my friend. Guys, I do have to head off. We've got Alan Perez coming to take over the show on this beautiful Friday. So as you can see here, Alan's coming to take over. Then you've got Chris and Nick as well. Guys, enjoy your weekends. I wish you the best of luck for the rest of your Fridays. Yeah, guys, stay safe. Don't get margin called. Enjoy your weekends. I'll see you all next week and have a fantastic day. Thank you for being here.
Today's video is sponsored by 8cap. And did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everyone. Here's the link to ACAP. If you are looking for a new brokerage, they have a 20% welcome bonus for a limited time. Make sure it is the right brokerage for you. But if you are looking to go ahead and transfer over to a brokerage, there's a good one for you. Good morning. Good morning, Kier. Hope you're doing good. Hope to all the regulars here. Let's see what's going on. You know what? I'm going to start off today with currency strength just to make it easy. Let's see who's really winning here. Risk on is winning on the currency front. So we have Aussie and Kiwi up on the day. Swiss franc is down. Dollar is doing all right there. Everything else is kind of staying below. But okay, so we see the risk currency is doing well. As far as a news release stuff goes, nothing crazy on the U.S. side of things. We do have U.S. S&P services PMI flash. Besides that, nothing much. We did get some stuff out of Europe though, and the UK. Retail sales did better. Okay. Services PMIs in France better. German services better. Eurozone services better. Okay. UK services PMI is better. Okay, awesome. So we're seeing some good stuff there. I know in the UK growth was a big concern. And that seems to be improving, which is really, really good. I still wouldn't buy pound dollar though. Here's the reason why. Okay. I think that for now, the overriding theme is going to be this oil price. We are seeing oil lower today, -3%, but it's still above the level that I don't like, which is this 85 handle. So as long as we're still up there, I'm pretty cautious. If we're up there, I'm pretty much looking for maybe some dollar strength continuing. I mean, dollar's pretty flat today. We are getting closer to that 102 level of resistance, so I'm curious to see what happens there. If we even get a reject from there, but yeah, okay, so pound dollar I like. Let me look at the edge finder too real quick, see where we're at with things. Let's go to just type in GBP here. GBP. Pound Swiss is getting a bullish reading. Pound yen bullish. Pound US dollar bullish reading of 4, but it has fallen off a little bit here, so I don't know if I want to pursue that. I'm going to hold off on pound dollar. Again, this oil price higher where it's at right now. Yes, it's down on the day today, but it's still elevated and it's still within the war range, we'll call it. So not the biggest fan of that. Someone said, honestly, what's wrong with Trump? The market no longer follows proper fundamentals. Yeah, I mean, that's just a big risk, right? Like, you know, you don't want to follow the fundamentals if things can change. Like if something drastic really happens, you kind of have to follow that. Right now, the big thing is the war in the Middle East, inflation concerns. That's kind of the big driver there. NDT says things are overvalued and some things are undervalued. You need some smart thinking to find the gems. Of course, buying everything on a discount is kind of the way to go. I'll say this: gold. I bought some gold. In fact, here it is. Pretty flat right now. Not really doing much, but I like gold. This is the FTMO chart. Let me go to the actual gold chart that I use to analyze things, the Oanda chart. Bearish trend line here. Broke out. We broke out of here. We are now retesting the trend line. I would like to see if we have a continuation higher. The edge finder yesterday also was bullish on gold. So let me verify that that's still the case. Oops. Yeah, gold is still getting a bullish reading. So speaking of undervalued, I think that if this is going to be solid support here, this is going to be the floor. Now, obviously, I don't know what's going to happen next in the next 2-3, weeks or months. So I can't say that this is going to be the floor for sure. But if we just look at price action in relative recent terms, you can see here that we're at a pretty good discount, and then the highs are over here. So I would say this is the discount level and this is a premium level. And if I want to buy gold, I want to get the best discount I possibly can. So assuming that the price action holds moving forward and this is a bottom, I think this is a pretty good level for me to take the trade to the upside. We had the break and retest of this bigger trend line that started since the war started. You are bouncing off of this level of support here. You also have the edge finder getting you a bullish reading of +4. So that gave me some conviction there to take gold to the long side. My stop loss is right down here below this level of structure. And if I show you here, this is what it looked like right below structure. So that's kind of the trade idea. Also, I do like that we have lower oil prices today. Ideally, if you get some lower oil prices and they stay lower and they trend lower, that can help ease some of the inflation concerns. And in that case, that would help soften the dollar, soften US yields, and that would help my trade with gold. So I do like it a lot. Again, this is just a first attempt, a stab at taking gold to the long side. If you were to see oil higher for longer, yields higher, which is this right here, US 10-year yield, which is the 10-year bond note there, the yield on it, if it continues to trade higher, then that's going to be bad for my position. So one thing to note, like I am buying gold with the US 10-year yield making fresh highs relative to the war start. So I do understand that. Yeah, war isn't usually bad for gold. There's a lot of different factors, and it's always very nuanced. But, I say this, when the war started, everyone on social media was like, buy gold, buy oil too. They were like, buy gold, buy oil on the open. And this is literally the candle right here. This candle at the very top. This is the market open when the war started for gold. Okay. Ever since then, boom, straight lower. Why? Because of inflation concerns. Gold is not yielding anything. They prefer going into safe haven US dollar where it yields something. Lots of different reasons, right? Cost of holding it increases as well. And so, it's not always black and white. It's not always war equals gold. You have to really think at the bigger picture. Max says Bank of Japan to keep key rate unchanged at next week's policy meeting. I did see that. They weren't intending on hiking the rate. Now I did say that they wanted to hike every 6 months, and they just hiked like last month or something. So I wouldn't expect them to hike, this next coming month. But if they want to stop the bleeding here on USD JPY, that would be the way to do it. In fact, let's talk about USD JPY. Why it's moving up higher. Carry trade. We all know this. You can borrow money, cheap yen, and park it into US dollar, and you just collect the difference in interest rates. And that gives you this natural drift higher. Right now, Bank of Japan really can't intervene, because if they intervene, you still have very, very strong US fundamentals. I'm talking about the rate differential to push this thing higher. So for it to make sense for them to intervene, you would need the US to either cut rates and they stay flat, or for the Bank of Japan to start hiking rates. Right now, you have a a Fed that is willing to hike rates. In fact, if we go to CME Fed Watch Tool, %33 chance of a hike this month. And if you go to probabilities, you are having one cut for sure in 2026 and another one as early as no, you could actually have two hikes 2026. You have a 56% chance, 46% chance of September, October, and then you have a 38% chance of December. Let me show you this. We're going to pull up Epic Pen. See if it wants to work today. This is what's happening with dollar yen. Dollar yen interest rates, Japan's interest rates are right here, okay? And let's say that the US interest rates are right here. This spread in between is what drifts dollar yen higher. Right now, Bank of Japan just hiked interest rates like this. But the US is also going to hike in interest rates, okay? So the spread between the interest rates changes despite the recent interest rate decisions, right? Now you have a case where the Bank of Japan is going to stay like this, right? They, like Max says, they're not looking to hike in the next policy meeting, but the US, the Fed, is looking to hike 2 more times coming into the end of 2026. So the rate differential actually gets worse. And the more it gets worse, the more this chart drifts higher. Does that make sense, guys? Markets and currencies and the way currencies trend matters entirely, mostly, predominantly on the rate differential. Okay. If you own in a lower yielding currency, your best bet is to move that money out of this lower yielding currency and park it into the higher yielding currency. Okay. It's pretty much what's happening with Bank of Japan. Now, if you were to get something like this, where Japan is right here, US is right here, the US stays flat, but Bank of Japan starts to hike interest rates, well, then the gap between that interest rate starts to narrow. And that will it wouldn't cause dollar yen to just roll over, but it would cause it from going like this to maybe it starts to chop around. And then the closer and the narrower that the rate differential gets, then you can start to see a natural drift in dollar yen to the downside. Okay. But for now, because the interest rate differentials are wide and they're getting worse in favor of US dollar JPY, that's why it doesn't really make sense for Bank of Japan to intervene. Why would you? They did it here. They spent about 11 trillion yen right over here when they intervened, and they dropped it about, let's see how much they drop it by. 3%, 490 pips, almost 500 pips. They intervened, they spent that money. And then just weeks later, that whole entire move was reversed. No longer, it's irrelevant now, the intervention. And so that was a wasteful intervention. And so that's kind of the dilemma that Japan is under, is like the yen being so weak is bad for the consumer. It's bad for household spending. It's bad for everything. You know, they can't travel abroad because everything is so expensive abroad, et cetera, et cetera. That is the downfall of this. However, they can't intervene, because if they intervene, you have the case for it to just get walked back entirely, and then you just wasted that. So you really need kind of a hint of all stars aligned. You would need U.S. fundamentals, a broader U.S. dollar weakening, and you would need some kind of a hawkish theme or tonality from Japan. Does that make sense in the chat, guys? Type 1 in the chat, 2 if it made sense, 1 in the chat if it makes sense, 2 if it did not make sense. And that's why it's really hard to short dollar yen, right? Because 160 was the initial level for intervention. And then, you know, just as the things worsen, right? Especially too, if you continue to see oil prices higher, yields higher, that only makes UJ stronger to the upside. If you were to get the war in the Middle East starting to end there, well, you kind of already had everything aligning for a weaker dollar, right? You had NFP weaker, you had CPI weaker, you had PPI weaker, you had those stars aligned, but again, the overwhelming kind of theme right now is the war in the Middle East, which can always get walked back if things get too bad. When it made sense, awesome. Max says also today could be wild between. I don't expect MOF to intervene today, but they mentioned they are still ready to take action. I think, Max, like any intervention, especially for right now, like let's say that the war in the Middle East gets resolved, right? Then the fundamentals that we just saw with the U.S. starts to outshine itself again. Then maybe my thought process will be different. But if you do get Bank of Japan intervene and you get a 3 to 4% correction in UJ, which would look something like let's say 4% is all the way over here, right? Up to 158, 157. If you were to get that, I'd probably buy the dip. Or at 160. Yeah, I mean, depending on where it stalls out at. Right here, it stalled out at this level of support twice. But let's say we get a hit and it stalls out at 160 or at 158, like the 200-day moving average right here. Max, you better believe I'm going in on this if I get a discount of 158, 157 on dollar yen. Silver Shin says, how long can Japan tolerate weak yen? I wish I knew, but let me tell you this, okay? This is what was dangerous. A lot of people, myself included, if we reflect on the live streams, we're very cautious at UJ here at 160, okay? Because that was Bank of Japan's kind of level that they vocalized, and they said, hey, if we get here, we're going to have to defend that level, okay? 160 was the handle. Now you got to 160, and we are way above that. So clearly the tolerance level may not be so enforced, right? Let's take a history lesson about interventions and currencies and tolerance levels. Euro Swiss in 2015. Okay. Let's go all the way to Euro Swiss 2015. Anyone see this broken chart right here? What's going on? The tolerance level for Euro Swiss was 1.2. Okay. 1.2 was the level. And you can see that once we got here, price action was pretty flat. This was kind of the method back in the day in 2015. I wasn't trading in 2015, but I like to look at the history of it. This was a method. Okay. You would just trade around this level here and capture these little moves. But nonetheless, you would just trade within this level. And then one day, they're like, hey, we can no longer defend 120 anymore. We're going to depeg it. Okay. We are going to lift that floor. It just doesn't make sense. Wasteful interventions, etc., etc. They said, we're not going to hold a 120. And this is what you got. Okay. This candle. I mean, this looks like a fake chart. But look at these little candles right here. La, 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 la. And then one candle. This is a 1-day candle. In fact, let's measure this out. This was a 19% move in Euro Swiss. In 1 day, it moved 2,300 pips. Because of the move, brokers went under. Some brokers went out of business, big ones. People with the amount of volatility and slippage, people were getting filled 4,000 pips out. Okay, so let's say you were in a buy position here, and you saw this thing drop, and the price was already somewhere right here at 1.18, and you're like, oh man, I got to get out of this trade. Let me liquidate. Well, you would have been liquidated probably somewhere way over here. That's how wide the spreads were. Max is correct. So here, I'm gonna do this. This was my fear, but let's go. My fear was like I wasn't gonna be able to find the actual candle. I'm gonna put this horizontal line here, and then I'm going to go on I'm just gonna go 5 minute. It's not gonna work. I can do the replay function. In fact, I'm gonna go replay. Let me show you. It was Mike, but Max is right. Start new. This was a 5-minute candle, guys. This all happened so fast. Okay, look at that. This right here, you had one big candle, 284 pips, couple minutes pass, 15 minutes pass, and then the big one, down 1,300 pips. And then you just continue the slide from there on out. It was I wasn't there, but I would hate to be there. So that's a history lesson with Euro Swiss. Why do I bring that up? Well, 160 was their target level for USD JPY where they wanted to defend. But if the fundamentals just do not make sense and are not favorable for some yen weakness or yen strength, I would say, then perhaps they can lift the tolerance level. And if you were to get that, then it's very easy, very probable that you see UJ 170, 180, 190, 200, right? If it gets like that, $200 yen, that's 22%. That's 3,700 pips. So it's something that you have to be mindful of for sure. Now I understand why big money be crumped Credit Suisse. It was revenge. To be frank, Alan, yen got some good data recently. Yeah, they did. They did. Yeah, I'm definitely not discounting that. I just feel like, right now it's a matter of the urgency. Like I said, this is Bank of Japan interest rates, or this is Japan's interest rates right here. They hiked once. They kind of vocalized that this is kind of going to be it for now, at least. Whereas you have the Fed pricing in 1 and then 2. And so it's just going to widen there. If Japan comes back with some urgency and can kind of cap the advancement in the rate differential and kind of keep it at least the same, or if not increase it by hiking faster than the US, then maybe that can outpace the current risk of the war in the Middle East, inflation, all that good stuff. But until they do that, fundamentally, structurally, UJ kind of just drifts higher there. So that's tricky. UJ is tricky. Like I said, for me, I would like to buy at 158 if I can, where the 200-day moving average is, or even 160. But as long as you have oil prices higher, sticky, inflation concerns, like if you look at global yields across the board, the 2-year, New Zealand's up, US is up, pound's up, Aussie's up, Canada's up, Japan's up. It's tricky. It's tricky. I think that's just going to be an overwhelming kind of theme driver that's just going to carry on until that's resolved. The yields will be our compass. I'm with Max here. Been playing JPY strength for some time now. I was on vacation when we saw this move right here. I really wasn't giving any attention to markets, really, not much. But you did have this intervention here, and I was talking about Marco. I was talking to Marco about this yesterday. But imagine just the beautiful trade this would have been. Bought dollar yen on a discount right here, caught all of this appreciation and positive swaps. Oh, that would have been beautiful. And look at that. Minimal drawdown there, just kind of drifting higher day by day. Beautiful trade there. Let's see what the swaps are on dollar yen. For those that don't know, if you're trading currencies, this is a very important thing to be mindful of. If you're going to be holding trades for weeks to months on end, cost of holding, cost of doing business is very important. Let's see where it's at. Carry trade scanner. We talked about this yesterday, Marco and I. But if you look at JPY, this is why the JPY basket as a whole is doing bad. So just go JXY here. This is the Japanese yen currency index. You can see here that the yen strength is very much alive. I mean, yen weakness is very much alive, right? And you can see that if you were to trade anything against the yen, so Aussie yen, dollar yen, pound yen, CAD yen, all of them, they all give you positive carry, right? This is why yen is just so weak right now, is that you have so many drivers against it. One of them being carry, right? The carry trade. Basically, you borrow yen, you park it into a higher yielding currency, and you collect the spread on the interest rate. Very, very important, guys. If you guys are, this is why it's also very dangerous and difficult to kind of make a speculative bet on dollar yen and holding it for a very long time, right? For example, USD JPY here, rate differential of 3%, meaning that if you buy dollar yen, you would get yield every single day, right? For holding that currency. Vice versa is true. So if you go against this carry direction signal from the edge finder, which says buy, so if you were to sell that, you would have to pay your brokerage for holding that currency. And so maybe on a day-to-day basis, maybe not too detrimental, but if you're holding a currency or a trade for weeks to months on end, that could really eat into your profits if there are any. And if you're break even, then you're at a net loss, right? So this is very, very important. And so when you're trading, guys, if you guys are looking to swing trade, currencies, I would definitely refer to this chart here. So you can type in anything you want. You can type in euro, US dollar, and you can see, the positive carries in the direction of a sell. So if you were to sell euro, US dollar and swing trade it for weeks and months, you would get some positive swap on top of that, right? What's another one that we love trading? Let's see, another currency pair that everyone loves. I mean, we looked at it here, pound yen, right? Positive carry to the upside. If you want to play the yen strength game, Swiss yen could be a good play, right? Because it's one of the only ones that gives you a positive carry when you're trading it on the sell side. However, very tricky. Swiss yen has no technical kind of structure that you can reference for an actual break lower. This chart here this looks like a gold chart in 2025, 2026, where it is just moving straight up. And you have if you look left on the chart, there's basically no structure, no reference point that you can kind of try to bring to current time and say, well, if this does this, it can break lower. So for Swiss yen shorts to really work out, you would need to see some kind of a key structural change in the trend. Right now, we have some support. We have the 200-day moving average. So if you were to get kind of both of those play out and a break and retest and then a continuation lower, then Swiss yen could make sense. But again, it's really tricky to kind of jump the gun without seeing technical confirmation because this chart has really just been moving up. It really hasn't given us a big correction or big fall. Okay. So this chart would be one of those charts, the saying buy high and sell even higher. This would be one of those things. So you would need to see it really start to move before you jump the gun. And then the thing is, like, if you were to see Swiss yen fall, I want to see everything fall. I want to see Aussie yen fall. I want to see pound yen fall. I want to see CAD yen fall, dollar yen fall. I need to see all of them fall to really tell me that this is true yen strength and not just a one-off fluke event. Did I survive the gold pullback? Yeah, Nick, my stop loss, I'll show you here, is a little bit wider than I think yours was. I just have mine right over here below this level of support, this structure level, which is pretty wide, I would say. I mean, I don't know. My thought process is like, if this level kind of just chops around, cool. I would rather just buy at a discount level and see what happens from here. I think most of the peak worries are priced in. I say that with the US 10-year yield trading at recent highs, so I understand that, but I think a lot of the fears have been priced in. So oil at 89, it's kind of red today, but I want to see some more redness. If we can see oil prices kind of dip back below 84 and stay there, that gives me confidence. But also, I will say this, and I will admit this, that if you do see oil kind of get back into the hundreds, if you see yields continuing to rise, and if you see a stronger dollar, if you see dollar get really resilient here at 102, then I would just accept fate and just cut off gold shortly. So it's kind of my thought process there. Gold has a plus 4 score, not bullish. It is bullish. It is bullish now. A 4 reading is bullish. So go back to gold here. You can see that it's getting a bullish reading. And I will say, guys, the edge finder is pretty dang good at gold specifically. It's really good at gold catching moves. It caught it to the downside, and it has been very good on the upside. So I have some confidence here on the edge finder gold reading, bullish reading to the upside. Completely agree. If we get any sort of ending or potential ending, its CJ goes to all-time high. Surely, if we were to get the war ending, I think that the underlying fundamentals that have been kind of been released out kind of start to shine back again. Like, you have to remember, like, the inflation print's lower, right? NFP lower. Central banks were kind of seeing some progress there. A lot of growth too in the UK and Eurozone this morning, early morning. You have a lot of fundamentals that are pointing for gold to the upside, but it's just the overriding theme is the oil conflict, or the oil price, and the inflation concerns, and they're valid concerns, right? If you see oil get up here and they stay there, well, what we just saw when it comes to inflation and stuff gets walked back. So the ideal scenario from a trading standpoint, selfishly for my trade and from a humanitarian standpoint, if you can get the end of the war come relatively soon here and oil prices start to drop, then I think the underlying fundamentals start to outshine again, pun intended, and gold goes higher. Yeah, for sure, Nick. Let's get you on here. Let's see, how do we do the dual screen here, dual window? I see it. I think I see it right here. There it is.
What's up, Alan?
Morning, man. How are you?
Good. Yeah, I wanted to rant about our gold struggles here. I listened to Marco talk about it earlier. He was much more on the bearish side of gold, and I really looking at it, listening to your commentary, listening to Marco's commentary. I listened to like everybody's, segments just to get everyone's thoughts. Interestingly, gold, I can see the bull case and bear case very well. And like Marco pointed out really well, that if we're looking forward and we're making the prediction, let's say, for example, you think, and Marco does think, because I listened to his point on this, that the Strait of Hormuz is likely to remain shut, that no sort of resolutions seem to be showing up this time around. All of that to say, the path of least resistance is inflation higher, rates higher, gold lower. And I think that makes sense. The challenge that I have, the kind of balancing act that I'm playing with it, is that you also simultaneously have some of the data that we've seen has been coming in a little soft for U.S. economic data, and inflation X food and energy, right? Core CPI, core PPI, they came in light. That kind of like softens up the dollar here. And my thought, like if we're trying to look ahead, is that the Fed may be hesitant to raise interest rates all that much because they're seeing some of the economic damage that's potentially around the horizon, right? We had a soft NFP. I think NFP next week will be critical because of this, right? If they see the jobs market softening, it really caps a little bit of their potential to hike rates. That being said, the other wild card is that I have no idea what happens with the Middle East, right? That's if there's a turnaround, I heard you just saying it. If there's a turnaround in the Middle East, gold could rip higher on the idea of cooling inflation. So again, I see both sides really well, and that's why my stop is tight on it. I did survive that pullback that took place over the Asian session. I'm still in the trade. Yours is a little bit more of a swing trade than mine. Mine's a little bit more short term with a tight stop. So just wanted to weigh in and get your thoughts on that.
Yeah, both are true, and I would argue that Marco's is a little bit more clear. Marco's stance is very much showing itself now. I mean, we have 10-year making a new relative high here. Oil's back up, dollars firming up. It respected this level here. It's been bid here. My only thing is, like you said, you have the underlying fundamentals that we've been seeing kind of pointing in the direction for the bull case on gold.
Yep.
And this war in Iran, similar to the tariff situation, it was a self-inflicted type of thing that can easily be walked back versus something like COVID. You get it and you have to sit through it however long it takes, you know? The tricky part about this time is that you have two counterparties. So that makes it difficult, right? You have to satisfy both sides to actually lift that blanket off.
Yes.
But similar to you, if you were to get enough pain on both sides, so we're like, hey, we need to start resolving what's going on here. That could be like, okay, you lift the blanket and the underlying fundamentals start to outshine. And in that case, our bull case starts to work out.
Yeah.
But
it's so tricky too. And then in a second, I gotta kick you out of here so we can get Chris in on the conversation too. But I love that thought. And I wanted to also kind of think about this too. There's two sides of this. If you're looking forward, if you're trying to make a predictive move, you're looking more at like Marco's stance, which I think is perfectly valid. And if you're using kind of my more approach to this, which is just kind of, you could call it lagging, or you could wait for kind of waiting for confirmation. I'm looking at this and I'm saying, given the data that we've got, not the data that we're predicting, the data that we've got suggests to me that gold might be closer to a bottom. But to Marco's point, if you have more inflation coming down the pipeline, which is not, by the way, it's not like certain how much inflation we're going to get. Like that's a very tricky kind of calculation. So I think both theories can work, or both theories are perfectly valid in how you want to approach this. The point is, one of us or multiple of us are going to be right, multiple of us are going to be wrong. It's just managing it however it goes. So I think gold has some potential higher. If it doesn't, I'm going to get out of there pretty quick. And I know you've got your stop below these levels. So if that happens, then likely what's going to happen is, if the forecasted stuff that Marco's talking about, which I think, again, higher oil prices, et cetera, if that factors into a weaker gold price, it will probably also show up in our macro here later. We just don't know exactly how it will fall. So you're playing this forward-looking versus data-dependent, trend-following approach, and it's a tricky balance.
Yeah, it's definitely earlier too, so both are correct. I see, I'm going to pivot out here, and I see Chris Bober has Trueflation there, so I would really love to see what he has to say there about that. Some golden nuggets, but thank you, Nick. I will see you.
Yeah, man. See ya. Thanks for that.
Yep.
Hey, Chris.
Hey, happy Friday.
Happy Friday. I know you caught a little bit of our conversation there.
Yeah.
It's interesting, right? Because you're looking at yields, gold, stocks, and we are playing this game of who is right here, in the sense that, are we looking at a situation where, look, oil prices are higher, we're going to get more inflation coming into the picture, or do we wait for it to materialize in the data, right? So like the pro and con of waiting to see the data, right? If you're waiting for non-farm payroll, is the pro is like you can get less confused by mixed signals, but the con is you're kind of waiting, right? You're lagging in some capacity. So with this Strait of Hormuz stuff, oil price back on the rise, how real of a threat, how much more on the yield side do you think we keep pushing higher? Do you think the dollar has a ton more upside in the short term? And oil is coming down a good bit here today, down 3.4%. What are your thoughts on all this?
Well, I think that Trump is still the first line of defense. So we're going to taco whatever is escalating in the Middle East. We're going to, Trump's going to talk about oil is going to fall to zero, essentially. Did you see the, I don't know if it was on Truth Social, with some Iranian party that was like, something effective. They wanted this, like US wanted this, but instead they got triple digit oil prices.
Yep.
Which I was like, touche. I mean, that was pretty well said, considering we've had, we were down to 60s and everyone's like, look at this. It's just a one-time, oil shock. And here we are 30-something% off those lows. So I think Trump is still the first line of defense. We'll still probably back off and have more, de-escalation and then escalation. It is noise. I think what I'm watching the most is how price action closes today to take us into the end of the month. I think we are extremely vulnerable below 7,400. So S&P 500, this is the CFD. So we traded right at the 50-day moving average yesterday. I think today's close pretty darn important, because if today's close is going to give up the 7,425 or 7,400 zone, this low come into the mix, where it then becomes, okay, we just broke the 50-day moving average. Do we move down to the 100? If so, that brings in those previous, June corrective lows. So if today, and I'll just throw some key levels out there. If today we are back up to like 7,450 or 74.75 or higher. I do have some potential levels we could see 7,500. If that is the case today at 7,500, then I think we are nowhere. It's the same noise, and the market just continues to churn in this meat grinder market, which is super choppy, volatile ranges, gap low, gap high, doesn't really matter. Is price actually taking us anywhere? And if we're back above 74.50 today, pushing up, no, it's not going anywhere. But yesterday, like, it felt like a scare, right? It's like yields making fresh highs, oil's up a ton, you know, Tesla, Google getting smoked, Dragon Mag 7 lower. Nothing really had a bid yesterday, you know. Meanwhile, chips like SMH was, I think, a tiny little green candle yesterday. That was maybe the only saving grace, but like 64% of the stock market was down yesterday. And we were down, you know, 1%. So could be worse.
Yeah, yesterday felt a little different, I would say, than some of the other days. Outside of, I think if semiconductors had fallen too, it would have been a very red day.
I was prepared for like a 2.5–3% sell off. If everything was like, if it was a big, massive flush for everything, I was prepared for like 2.5–3% move.
Yeah, I was thinking, you know, there was a huge, a lot of stuff was down. You know, you mentioned Google and Tesla, obviously the earnings, but just looking at I mean, we had Mag 7, Amazon was down 4.5%, Salesforce down 4%. ServiceNow had good numbers, good response initially, still closed down almost 4% yesterday. Meta was down 3.25%. So really ugly day for, you know, a lot of names. And so, yeah, I mean, we're still, however, to your point there, look at the S&P 500, you're still in barcode territory where we've just really gone nowhere for a couple months. You know, probably great on the premium selling side of things because we've not really followed through anywhere. But, you know, the question now becomes, with this whole Iran conflict, this feels somewhat similar to where we were over here, where we were barcoding, waiting for a little while, and finally stuff got real, got people, you know, real scared, and then boom, it was too much once again, and ceasefire started, you know, getting flooded out of the door from the White House. So could we see something similar like that take place? Could we see, you know, a little bit of tolerance here? We know how important, you mentioned it as your first response to that was, you know, Trump is still kind of front and center here. If you get, you know, some pain here, is the Trump put still there? And I think probably it is.
Absolutely. The question is if the market's going to respond to it. Like, what can he possibly say that's any different than the war is over, we've got a ceasefire, all is well, we've got a deal? Dude, we've heard that. We've heard it 100 times already. Like, so if the market rolls over and he's squawking at, you know, it's done, it's over, our oil price, I mean, maybe it listens for a day, but that's what happened. I mean, during the rollover in March, it's like we started to see Trump tweet and the market would rip up for the day and then fade it, rip up for the day and fade it. So that did happen for like a solid, you know, 3-4 weeks where it couldn't recover. So again, it's like, I'm not saying the market's going to hinge on Trump. I will say that nobody wants to see the stock market go down. You know, I think that the Mag 7s overall have gotten cheaper as far as like price to earnings, forward price to earnings. It's gotten cheaper as this dispersion has taken place this year. I think it's basically the balance. It's like the seesaw between Mag 7 and SMH, because like yesterday, Mag 7 is down, SMH is steady.
Yeah.
If they both get a bid, the market's up. If one gets a bid, I mean, they're large enough right now that it's like it can still keep the market from tumbling over because at least something is being bought. And I'm dude, it's like every few days, it's like, well, who's going to win today? Is it going to be Mag 7 up today, which is kind of the safer, like large cap value? It's like tech value essentially. And then SMH is, well, there's still a bid because it's insatiable demand.
Chris, I sold the,
volatile,
I know we talked about it. I sold the 300 put on Google.
Nice.
I did it after the earnings. I ended up waiting until after the earnings, which obviously hindsight was, you know, great. But when I looked at it, I just wasn't quite getting the premium I wanted out of that. When it dropped, I was like, okay, you know, I think as you just pointed out, valuations have come in a lot on some of the Mag 7 stocks. And so, you know, as they keep dropping, I get more interested in them. Not so interested necessarily in Tesla still, but Tesla, I got to say, with that kind of a discount, with that kind of a pullback, I wouldn't call it a discount, but that kind of a pullback here, suddenly, you know, Tesla, is it headed back to test its 200 weekly, which is, you know, around $280 a share? We'll see. I mean, this stock is notoriously one of the most volatile names probably the most volatile of the the super massive companies out there outside of SpaceX. I don't know, I've got to catch you up on some things I've been throwing out there. I threw out a short put $90 strike price on SpaceX, small amount, but willing to maybe start a position down there.
Hey,
That
join
would
the
be
club.
Oh, are you at the 92 or somewhere
I'm
around
at
there?
I did a 105 by 95 ratio spread. So if I take
Okay.
ownership, it'd be like low 80s, and then I also
Yeah.
have another one that's like 105 by 75.
Okay.
So I mean, it'd be like I'd own SpaceX at like $81
Mhm.
or like $66, depending on my assignment if I get assigned. But we'd
Yep.
have to be, like we have to fall to $75 for me to get assigned.
Yeah,
So
I think
that's a
for
long ways
me,
away, but still, who knows?
assignment would be at $90 because I just did the short put position.
Correct.
But
Yeah.
the premium that I got on there was juicy. So I think it's like somewhere around 80, mid 80s would be where
Okay. What's your expiration? How far did you go out?
just 29 days to, or
Oh,
now
dude,
it's
that's
28
great.
days, the 21st.
That's awesome.
Yeah.
Yeah.
So I'll just play that, and if it gets assigned, fine. And if it
Yeah.
doesn't, then I'll probably do it again, especially if the stock is lower by then, which again, these things, I'm not in a hurry to take assignment because we know the IPO pattern here has been on perfect display
Yep.
with SpaceX. Big
Yep.
pop in the open, down. And if anything, if the IPO pattern keeps playing out, it's like 1 year later, right? It's like not a quick, bottoming out process.
And look, the crazy part is the mega IPO pattern is within a 12-month window of IPO, we have like a 30, on average, like a 30 something percent drawdown.
Yeah.
We're at 50%, like
Yeah,
50%
nasty.
from the highs. Now from the opening price, I mean, we're down about 20 something percent from the IPO price.
Yep.
But yeah, we've had a 50% drawdown. It's almost crazy if it catches a bid here at that 50% pullback. That's like textbook mega IPO stuff.
Yeah.
Yeah. Which in a way wouldn't surprise me if they're like, you know what, just condition this thing to be like pop on IPO, fade back to the beginning, and just see where the interest is at. I would like to think we're going to hold above, $100. I know a lot of the banks and underwriters are kind of looking at like the 130, 135 zone.
Mhm.
But this is, very much like a risk. I think a risk on play. It's like nobody knows what
agree.
the space economy looks like. And it's a liquidity grab. It's ahead of Anthropic and OpenAI when those IPOs come out. I think, look, dude, going into July, if we finish this month, I mean, still talking like flat. If we finish this month above 74.25 or 74.50, we're still just in this chop fest between 7,400 7,600. Now, going into August, September, I still believe that this chop, this indecision, August is always a tricky month. And I feel like almost every August we have something to talk about, like, oh, that was weird. Oh, I can't believe that happened. Like, that's what August is kind of notorious for. But I do think that everything kind of crescendos into like August, September. We see more like October bottoms for any month in the markets. We see more bottoms in October than any other month because August, September is usually a bit of a scare. It's like a seasonality weakness.
Yeah.
So I don't think we're done. And so even this like July chop does not mean like, well, we've made our way through it. It's like, dude, I don't see August, September being 2 months to hit all-time highs. I think that's going to be, holy crap, let's hang in there and see if this market can digest all the drama without getting beat up too badly. But in the back of my mind, I'm just like, be prepared for a 10% peak to trough correction, something like that or more.
And look at this. I mean, July, seasonally, we were expecting best month of the year, right?
Yeah.
At least in the last 10
or
years.
Just something good. Something good.
July has been very positive. This year, you can see this dotted line for listeners. That's kind of your performance month, month to date. You can see it's flat, right? So flat, we had a nice initial pop and then gave back the gains. This is S&P 500. August, September, these are the periods historically the last 10 years where, as you pointed out, Chris, you're going to typically see, your drawdowns, your pullbacks. And we've had, last couple of years, we've had months like this in August. We've had, months like this, as you pointed out, that kept going into the October bottoming.
Yep.
I had some really last few years. This window has been really, really good for me. Just paying attention to this seasonal pattern, like being a little bit of aware, like, okay, keep eyes open for dips during this period, because a lot of times you get that kind of end of year rally up into October, November, December. So we'll see.
We will see. I want to know I'd love to know like what kind of that percentage would be. Are we talking, maybe we creep up to 7-10%? Do we get something really scary like a 15%, 20%?
Yeah.
I mean, we had a 10% correction already. We had a 5% correction already. Another 5 or 10%. It makes it difficult to think that 10% pullback, 5% pullback, another 10% pullback all in the same year is somehow going to thrust us to new all-time highs. It's like, what's better right now? Like, look, dude, all the good stuff as far as like the big, beautiful bill, all the instant appreciation, all the gains, all of the revenue that's claimed now, like we're talking like some of the earnings that's been priced in is like 2029 earnings.
Yeah.
It's like, how much further can we go out and like claim what we're doing and like how good things look and how profitable things are? How far can we go out and drive our markets higher with these valuations? I think that's, again, I don't think that the top is necessarily in, but man, to get like a renewed sense of momentum to the upside, I think is going to be tough. I mean, we are seeing slowing growth. We are seeing like for the first time in, I think since 2004 is the first time that we've had a negative cash flow quarter for Google. One of the biggest companies in the world. And still, like they had the best quarter performance, highest quarter ever, right? But cash flow is negative.
And this market just does not tolerate any
punishing that.
It's just like interesting to see that. You can see incredible numbers, stock gets sold off. Micron, the same thing. I mean, you have a lot of these names that are doing rock star stuff. Intel, I had to dig into this a little bit to understand what went on, but they had a massive pop after hours yesterday for listeners who are not caught up on Intel. Massive pop on earnings, incredible numbers. What the market didn't like and what it heard in here was that they are spending so much that they may need to dip into the secondary market to raise funds. And it's like, you say anything
just
remotely,
stop saying that right now. If they stop saying it, the market will punish it badly.
Yeah, CapEx spending, clearly the market hates it. And it makes more sense why it is more sensitive than usual, because look no further than the 2-year yield is ripping higher. So they don't want to hear higher borrowing costs, more borrowed money, higher spending. And you know what? The other even better one to look at to show you that example is Apple. Apple is not spending that kind of money. Right. They're sitting back and they're looking pretty right now because they have no ginormous CapEx like a Google, like a Microsoft, like a Meta, et cetera. And you pointed it out. I mean, Mags has not been a big performer for a while here. It's really the semis that are holding up the market. And of the Mag 7, I to be completely honest, had no expectation that on my bingo card that Apple would be the dominant leader here this year.
Yeah, I would have given that endorsement to Google after Google's like the TPU GPU back and forth, like who's going to reign supreme. It's like Google took the reins from NVIDIA a little bit with that all-time high. Now it just looks like every other chart. Now Amazon and Google look about the same. Meta, Microsoft look about the same. Apple hitting all-time highs. Good for them. And that was also on. It's interesting how the catalyst started. It's like Apple's going to raise their iPhone prices by $200. Oh my gosh. And that's up to all-time highs like 2 weeks later.
Right.
So it's just as weird. Like it goes up on sticky inflation, goes up on them raising prices. But they, again, I think most of it is they're being rewarded for not having this massive CapEx spend and going into negative cash. Yeah. So look, dude, the build out continues. The demand is high. I think that there is this disconnect between what Wall Street wants and what Main Street wants. I think there's unknowns and uncertainties with what Main Street thinks AI is going to be. I mean, it is no different than building out a railroad, laying fiber for internet. But I think the one thing I keep going back to with this AI build out is like we can build, like Mark Cuban had a quote yesterday and said that there's going to be data centers that become pickleball courts. I mean, we could build things, pause things that are like not going to develop. And I think what concerns me the most is we build a data center and the cost of maintenance of like every, let's say 2, 3, 5 years, we're rotating like all the hardware. Right. Because it's not enough. It's not good enough. It's not modern enough. We have older chips that are going into like older chips are being used because it's just we are not producing enough. There's like a supply bottleneck. but the markets haven't really crushed prices from that side yet. Like we talked about like energy prices. We talked about these supply chain bottlenecks. I just don't think they're showing up in stock prices yet.
This is the IGV versus SMH chart.
Yeah.
I have a hot take on this one. It is super contrarian to the market, but I think that semiconductors, I think they're amazing. They're like kind of the backbone of the AI trade. But I personally think that the better value, at least where I like better, is in software.
Sure.
The story that I think you just highlighted is that the data center becoming, all of the overbuying of supply. That's what people do, right? When there's a bottleneck on supply, they overbuy it massively.
Yep.
And that makes things like Micron appear indestructible, like never-ending demand. Because if all you hear right now is like, we've got orders out the you know what, like, and there's no shortage of demand. Well, there never is shortage of demand before there's a shortage of demand, right? Like there's
Right.
like so much overstocking, overbuying going on. And I do think that if you have, I think what prompts the slowdown in that is probably something like the 10-year ripping. Like if that happens, then, all these finance gurus up at these giant Mag 7 companies are going to say, we need to slow the roll. We need investors to stay on board, and they do not like CapEx spending. They're aware of what we're talking about. And so they're, in my opinion, that potentially causes a pullback, a slow at some point. I don't know when, but the market is smart enough, in my view, that it will figure that out before we start hearing about it. It will start saying, yeah, we're sensing a slowdown, like a peak in demand. And that's what people are arguing now is happening with semis, is that maybe they are peaking in that indestructible story for demand. And I think there's a number of waves that are coming for it. The two big waves are competition, which we've discussed many times, the Chinese, the many different companies that are trying to get in on AI, the Magnificent Seven themselves are trying to build their own chips. There's so much profit margins. There's so much potential here that everyone wants a piece of the pie. That is how supply and demand in economics work. There's a huge profit margin. Everyone's going to chase it and compete for it. And the second one is an external force like 10-year yield ripping, higher input costs, that's going to challenge the risk appetite of the market and hold them kind of steady, pull back the reins on some of the spending. I think could really significantly change that landscape. So that's my take on it. I'm not necessarily like, oh, I think semiconductors are going to top and it's going to die for 30 years and this is the end of the story. That's not what I'm saying. I'm just saying I think you got overly optimistic, and I think semis can continue to drop, and a 40% pullback is normal, as weird as that sounds.
It is, and I don't think that's necessarily the top. I don't think it's top, but
yeah,
I'll pull back to buy and get a dip on would be an interesting define risk trade. I also I saw this. I think it was this week that basically semiconductor companies are kind of hoping that Mag 7 stocks aren't trying to like economize or basically they're just going to keep spending to fuel semiconductors demand. But if they switch and pivot like an Apple does, or they pivot like even a Meta that's like, we're just going to build our own chips. Yeah. It's like if they all kind of pivot that way, it's like, look, all those companies, I mean, Mag 7, let's say Mag 7 to top 10 stocks. They probably have some of the smartest leadership that has navigated the last, 10, 15 years of markets in general and their own just being moats. I don't see them wanting to give up that competitive position.
No,
no.
It's like having the global reserve currency. If you have the momentum in front
you're
of
on
you,
top of the hill, don't give it up. Like you're going to try to protect it. So
here's another prediction on my part. Again, not financial advice for anybody. I'm just some idiot on YouTube. Microsoft, I think, will do what Apple did. That's my prediction. My prediction is Microsoft has gotten their stock waxed.
Yep.
They don't like that. They've been a stock winner for a long time. They've been, the S&P 5 for like the last 40 years or whatever, 30 years. I think what Microsoft will do is it will copy and paste, or at least copy some of the winning strategies that Apple seems to be getting love on.
Mm-hmm.
And I think that they have, just like Apple, they have the ecosystem, just tens and tens of millions, 1 billion people plus, Windows, using all their platforms. They have what I believe is the most important aspect in software, in tech right now. They have people on their platforms. I think what they'll then do is they'll say, all right, we're going to maybe scale back. We're going to rethink some of our AI spending. And if they do that, I think the stock will rip because people will love that. And they'll say, you have the people like Apple. And so that's my prediction. The stock is hated. It's spending a ton of money. Anyways, I think that they will like that approach, and king of the hill concept, like you just said. I think they don't want to lose that spot.
Agree. And also I think that's what builds in this resiliency. I just wonder, let's earmark this conversation and say, well, once we get into August, September, let's just be open-minded to think like, what would be the catalyst to drive this market lower? Because at this point, on again, off again, Middle East conflict. Okay, we kind of know it. It's like, does it escalate further? If we get ground troops going and there's boots on ground, that doesn't look good. And the market's probably going to hate that as far as that being a catalyst to drive things lower. If we start to see, Mag 7 and semiconductors at the same time going down, that's not good because it's so concentrated. That's 40+% of the entire market right now in that area.
Yeah.
So it's hard to have, and I think that's why we're still off of these, this July chop has been within 200 points because one day it's mags up, semis down, other day it's semis up, mags down. And that's just been this seesaw effect. But if they both catch a bid, we go back to all-time highs. If they both, dump at the same time, we're breaking key structure and probably revisiting those June lows, 5% or more. We might revisit the previous all-time high, which is around 7,000, which I think at this point, if we pull back to that level from this 7,600 high, there's a 200-day moving average test. There's an 8% correction. If the market's burning off, let's say this is just nothing but chop, okay, all these moving averages catch up. Key consolidation. The fear for me is that we just do nothing but go sideways. All these moving averages catch up, and then we break below. This is open space. If we are below that 200-day moving average, open space to the downside, and all of a sudden the market has to then thrust itself back above that. I think that's a lot harder than just having a correction down to key levels, finding support without breaking a bull market look. But if we stay up here and then we break below the 200, it's like, I just think we can have more. And this whole March low that was like pivot hard. I mean, I don't know, dude. I just think volatility is so much higher and cycles are so much faster than they've been in the past that I keep saying this. I am bracing for 6,300. And I don't think we get there necessarily, and I hope that we don't, but that's where I'm selling all my premium and all these little flare-ups. And when the market is down, I'm typically going out to, end of the year and thinking, well, that's a huge unravel if we get there, Nick. If we go all the way down to March lows, that's like a 17, 18% correction. And so I'll play the odds of that, not necessarily happening, or if it gets there, there's a bid to go off that low. But other than that, I've just got to stay out of the freaking way right now.
Yeah, I think that's fair. Last thing, and then we got to throw it over to our next show host, and you got to get out of here. More likely for 7,000 on SPX by end of year or 8,000? What do you think?
By end of year? I think, I think in typical post midterm or election flows, plus trying to finish the year on a positive note, I'd say that we're greater than 7,600 by end of year. So I think we're closer to 8,000 end of year than we are 7,000. I think unless this happens, Nick, unless we hit 8,000 first, then we're going to 7,000 by end of year type thing. I think either one of those levels is going to be the magnet. It's just which one is. If we hit 8,000 first, we're probably going to limp into the end of the year. If we hit 7,000 first, I think we have a chance to rally into end of year Q1. I like both the numbers. I want to see. I mean, for me, it's give us a dip to buy versus melt up, and then we crumble to 7,000, and it's a really crappy way to finish out the year or start 2027.
Same story. Chris, thanks for your time, man. Have a good weekend, and thanks for coming on today.
All right, see you next week.
See you, man. Guys, we have got, in just a second, we're going to switch the show back over to my friend Alan Perez, who's going to be taking over for a little bit longer. Let me just really quick shout out our newest sponsor here on the show. It is Prop Shop Trader. So if you're a futures trader like Chris, or if you are an equities trader like Chris and myself, this is a really cool prop firm to check out. If you scan the QR code right below my camera here, or we can drop the link in the chat as well in a second. But if you check out Prop Shop Trader, they are a equities and futures firm. And there's not a lot of prop firms out there that do have a program for equity specific. So if you're someone who trades, Apple and Microsoft, Nvidia, Meta, etc., if that's something that you're interested in, then check out, again, Prop Shop Trader. They also offer a really nice discount with our code A1 Trading. So A1 Trading, I'm just going to put it in the chat here. A1 Trading, I believe that gets you 50% off right now. So anyways, we did a webinar event with the CEO and his, I think it was his head of risk management at Prop Shop Trader. Actually was so cool. They have something really unique, which is when you become a trader with Prop Shop Trader, you also unlock like a wall of really powerful market indicators and software. They integrate with like all the major trading platforms, but they also have like their own in-house tools that their traders get access to that are sick. Like they're really, really cool. So if you're interested in checking them out, there is the QR code. I will also drop the link here in the live stream chat. Up next, we are bringing back on to the show Mr. Alan Perez. So don't go anywhere. He'll be on just after this quick break. Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
Good morning, good afternoon, wherever you guys are watching. Lots of cool stuff here. We got Prop Shop Trader discount. We also have Ola Prime, throwing a lot at you. I'll make it easy for you guys. I'm going to throw one more, but we're going to consolidate it all. If you guys want to join the free Telegram channel, either through the link there in the chats or the QR code, you can go in there and you can see all of the promos that we have for Edge Finder, Prop Shop, Ola Prime, all of it, all of the above. You can find it there all in one spot. So it's very valuable to you, and it is completely free for you to join. No paywall or anything to get in. Just go ahead and hop in there and just enjoy the fruits of it. Hello, Sluggy. Good morning, man. Good to see you. Gold to 3,900 soon? I hope not. I hope not, because I am in a buy position on gold. So let's get that puppy to 4,300, 4,400 and beyond. Hey, Kier, good to see you again, my man. Yeah, nothing much has changed since the last time I did come off here. Oil is still seeing some pressure, but not enough pressure, I would say. I would like to see a lot more. I would like to see oil back below $84 a handle. That's kind of what I'm looking for. Dollar is bid up here. I'm curious to see what happens at the 102. This would actually be a really good tell for me, okay? My argument here, and one of the arguments that we all share, I would think, is that the worst case scenario has been priced in, okay? Unless you were to see, like Chris said, boots on the ground, something different from what we've seen, then I could see, further repricing to be done. But as of now, we kind of have seen the worst case. And so I'm curious to see what dollar index does here at 102, okay? At this 102 level where we rejected it in the past, this was essentially the peak of the worries here. If you were to get something past 102, then maybe we're seeing something different that the market hasn't priced in, and then we can continue higher from there. So I'm very curious to see what happens there. With that, let's look at yields. Softer on the day, but nonetheless way above where the war started, right over here. So I'm not gonna say that it's gonna be down from here because it's too early to tell. 2-year yield is making fresh highs, relative highs, lots of momentum behind it. So we'll see what happens there. What's the VIX doing? VIX is down or up 1%, not really doing much, hugging that 200 day. And the stock market is quiet as well, with the S&P flat, Nasdaq kind of flat. Though I am looking at this key level here. I think that if we get a flush lower, then definitely the next kind of place where we would find support would be here at 26,000, 26,400, where you have that 200-day moving average. So I'm definitely looking at that level for a potential buy opportunity. What kind of a discount would that be? That would be a 7 to 8% discount. Not bad, not bad. I would actually be very I would receive that very well. Let's see, what else do we have here? Bitcoin is something that I'm looking to short. We are pulling lower, but we haven't tapped into my zone. I'm going to be patient with that. If I miss the trade, so be it. I just move on. But I do like Bitcoin to the downside. If you were to get a revisit to that 200-day moving average, in fact, I'm going to delete this zone here because I really just want to get to the 200-day. And then I'm going to move it this somewhere over here. I think if you get a revisit to that 200-day, then I'll be targeting 50K. What stops above structure, above this 200, and we'll see what happens there. Let's see. Anything else here? Let's look at rate probabilities. Rate probabilities, 35% chance of a hike this month. And then you have essentially the idea of 2 hikes into December, going into December. Slugging, you're in Bitcoin short, small position, nothing crazy. I'm curious where you got filled in at, man. Like, are you not looking for a pullback? Or, I mean, it just depends, right? But I like the idea to the short side. I just don't know how aggressive this thing is going to continue lower, right? So ideally, I would like a bump up to that 200-day. But we'll see. We'll see. This is also a key level here of support that I wanted to get in on, break and retest. We broke it, but then we just flew right up from there. So maybe same thought process. If you get a break and retest and continuation lower from 60,000, if I don't get the pullback to the 200, but for now, I'm not going to chase prices. Kind of in the middle. It can go either direction. Too soon to tell for me. Ellen, pound USD shorts go to 32,220. Let's see. Pound USD short. Okay. So you're going to short it, hitting this level right here, this recent level of support. That's good, man. I like that. I like that. You are seeing, if I'm being honest with myself, you are seeing oil higher, the dollar firming up. You have yields higher as well. So this is, if you're wanting to play that, then for sure, euro dollar to the short side, pound dollar to the short side makes a lot of sense. Makes a lot of sense. I do like that level. If you were to get a break from here, this was previous support. And this is also the 61.8% retracement level too. So if you measure this out with a fib, this is essentially the last opportunity that the bulls have to kind of step in and take this and continue the trend to the upside. If they fail here, then technically the bulls lost, and pound dollar to the downside makes a lot of sense. Lots of sense. You're also looking to short 6E, so euro dollar. You're trying to short euro dollar. I like that one, man. I'm curious about it. I'm just conflicted, right? I think a lot of us are conflicted as to like how much more upside do we have in the dollar? That's the big question. One thing too that I saw not too long ago, the Edge Finder has no bearish readings. Nothing is bearish on the Edge Finder, which is interesting. I don't think I've ever seen that before. Let's see what we have here as far as opportunities go. What do I like? I like Aussie CAD. What's Aussie CAD doing? Here it is. So it pulled back yesterday, but it's getting a little bit of a bump up. But I do like Aussie CAD. I like the Aussie basket as a whole, actually. Aussie Swiss. No pullback at all. CAD Swiss. Euro's bullish, so Euro is bullish. Euro USD is bullish. Gold's bullish. Silver's bullish. The yen is bullish, or the yen basket, like CAD yen, Euro yen is bullish. Aussie dollar is bullish. What's Aussie dollar doing? Aussie dollar is bullish, and you know what? If I get a pullback into here, it's kind of similar to my gold position where I'm trying going against the dollar here. If I were to get a pullback in Aussie dollar to the 200-day or somewhere within here, I'll take this to the long side, if I'm being honest. I like that trade. I like that trade a lot. I like the Aussie basket as a whole. So Aussie CAD, Aussie Kiwi, Aussie Swiss. I need to pull back in Aussie Swiss though. Aussie Kiwi looks really good. I might have to revisit that trade. Sluggy likes Euro Aussie short. Let's see. So Sluggy, you're not really shorting Euro US dollar because the dollar shrink. I think you're just trying to go against the euro, which in that case, Euro Aussie to the downside makes a lot of sense. The only thing is I'm looking at this chart here. For one, there's no bearish reads on Edgefinder, so it would be hard for me to jump in. But also, two, we kind of already are extending to the downside, so I would need some kind of a pullback here higher. What am I talking about, bro? I'm talking about the moon landing and how it was AI. They had AI back in the day.
Yeah, it was staged for sure.
You think it was staged, man?
Absolutely. And the Earth is flat.
Yeah, the Earth's flat. I could stick with that one. Like when I went to Croatia to visit you, like it was just like I didn't feel that. I just
you didn't feel the curve.
Line.
Yeah, of course.
Nick saw it. like for example, Marco, you've ever played Minecraft before?
I did.
You can just when you hop on the boat on Minecraft, you just go straight. There's no curvature. There's nothing.
Exactly. I think then flat Earth is confirmed. Minecraft confirmation.
Yeah, but the moon landing was AI. Elsha says all markets are bullish for me. Everything goes up. It's guaranteed. Enough with the trolls, Marco. How are you doing today, man?
I'm doing pretty well. Looking at some stocks here that are not doing so well.
Oh, man.
So, yeah, how are you on this Friday? Is it a bit of a boring one? A bit of a more, let's say, flat price action?
It seems like a boring one, man. Like the stock market's kind of quiet. S&P is kind of flat. Nasdaq's hanging out here at this very important level. If you get a flush lower, then that would be really cool to see a pullback, like a 7-8% correction. Dollar index too, kind of flat on the day. You're seeing this across all of the majors, so really minimal movements here. Gold as well, not really doing much. Let me look at the P&L on it. It's pretty flat here. So the only thing that's really catching my eye here is oil lower. It's very, very, relative to what we've seen here, a very small drop, right? But I do like to see oil softening a little bit, but it's really a quiet day, I would say.
I would agree. And also, I finally found a tracker for the straight. I put it in the group yesterday.
I have it right here.
Awesome. So I guess it's updated on a weekly basis because the last number is from Sunday, basically this last Sunday. And this is what we needed. So you can see the exact spike when the straight was open and now the sort of the low prints as it's closed. And there's actually a bet on Polymarket, which may be worth taking. Personally, I don't trust Polymarket with anything. I don't trust them with respecting the actual rules because I've seen a lot of shady stuff. But there's a bet where you can basically place a bet that the straight won't go back to 60 ships per day average that it had before the war. And the date is December 31st, 2026. And the current, I think, probabilities are around 50%. So there is some room to make money on that. As I mentioned, I would rather play it through financial markets. I would rather buy the dollar or just buy oil if you want. But I'm sure there's some traders doing poly market and betting that oil will or that the strait will remain mostly closed. I just don't see a logical way for it to go back to 60 ships per day by the end of this year. Like it didn't even go back to 30 ships. I think it went maybe to 30 ships when the strait was open. So the spike that you see in July, you should go to transit calls. So this is transit trade volume. So I think that's the number of ships. And in basically July, the number was what, maybe 30, maybe 40, but much lower than the previous numbers. So it's a pretty pretty easy bet. Although I've seen,
let's see. Let me zoom into this thing. Hold on, I'm having trouble. My mouse is tripping. Hold on.
I've seen on Polymarket there was a bet that said Michael Saylor sells Bitcoin by the 1st of May or the 1st of June. And one guy actually placed maybe $500,000 on it, and he won. So Michael Saylor did sell Bitcoin before that specific date, but Polymarket then changed the rules, and basically the guy didn't get paid out. So it's something I wouldn't personally put my money in, but it's a good indicator of what the crowd is thinking. Like you can make a lot of trading decisions just by knowing what the crowd thinks, and if you know or if you think something else will happen, well, you can place a trade.
And there's so many different scenarios too. Like it's so hyper specific. Like let me pull this up here just to give you an idea. But like so many things, like Hormuz traffic returns by normal by September 30, by July 31st, by July 13th, like whatever. Like so many different, U.S. charges Hormuz fees by, etc. Island no longer under Iranian control. Like that would be crazy, but things like that. One thing I liked about this right here is like you can actually see like the correlation between traffic increasing in June and then lower inflation prints and stuff like that. Like for example, this was the traffic beforehand.
Mm-hmm.
It was so quiet, Marco. You can actually see it here, so quiet, and then it popped up again, and now it's back to half of what this was, so a third. Not the best.
And can you go a bit lower? We need to find the Bab el Arab Strait or whatever the name is. It starts with a B. Starts with a bomb. This is the one. Yeah. So this one is another one to watch. Basically, the Houthis, which is another, I don't know, terrorist group or whatever, they're threatening to close this one. And it's pretty easy to close it because they just park themselves with RPGs on the mountains and shoot down on the ships. So it's a pretty tactically easy thing to close. And then if the US comes with planes, they just go back into the mountain or into the caves. So
that's when you have a B2 just roll through nice and slow and it just flattens out the terrain and it's a flat mountain at that point.
Yeah, I heard the US has like a tactical nuke dropped out of a B2 where basically it drops, penetrates, and then the nuke is activated inside of the mountain, and the mountain is no longer there, basically. They haven't used it yet, but it's getting there. So
it becomes an inverse mountain. So poking out from the outside, it's gonna poke. You're gonna see more of the earth inside.
It becomes like an ice cream cone.
Yeah. But yeah, this is very, very important as well here to see. It's good to see that it's pretty stable here for now, at least.
It is. It is. Yep.
There's also like just this idea that there's different routes or different ways we're gonna be able to overcome this via the new pipelines with the Iraq deal, which again, this was the timeline. I think Goldman or one of the big banks backing this deal said that it really wouldn't be in effect until like 2029 or whatever. So it's going to take some time.
Yeah,
so
basically.
The pain in the near term is still very real, I would say.
Absolutely. So I'm remaining with my USD CAD longs. Probably going to look to increase my exposure if it goes my way. I would love to sell gold. I know you guys are long. I know Nick and you bought, but I want to sell. So if we break the 4K level, I think it's actually a good sell right there.
Yeah, I think look, both can be true right now. That's we're talking about this, but yeah, if you break this key structural level here, then definitely gold is likely to continue its downward trend.
Yeah. Yeah.
I would hope to know that from a humanitarian standpoint, and then from the selfishness of my own self-interest of the trade that I'm in right now,
Okay.
that there's enough pain on both sides for them to stop what's going on. Ideally that's the case.
Absolutely. Absolutely.
But we'll see, man. If I'm thinking this is my headspace right now. If you're looking at recent relative price action, price reacted positively here so far, assuming that things get better. And again, this is just an assumption. I don't know. So again, I could very well be wrong, and everyone in listening needs to understand this, that I could very well be wrong come tomorrow or next week. But assuming that this is the floor, then I think on a relative basis, considering this level here and recent highs, that I am buying literally at a really good discount. So that's just my assumption. And for that assumption, I'm willing to take a risk-defined bet, a speculation to the upside, in the event that the war cools off a little bit, oil cools off, and the underlying fundamentals that are pointing in the direction of gold bullishness are able to outshine. But
yeah,
the reality of the matter is that the Strait of Hormuz, the war in the Middle East, the oil prices is front and center. That is like the main thing.
Yep.
So
Yep.
right now, Marco's winning. All right, oil's higher, you have yields higher, dollars firming up as well. That is the main driver right now for this market. Everything else takes a back seat, I would say.
Yep. And it feels pretty bad to be positioned risk off, because you're basically betting on a escalation of the conflict. And then you get comments like, I hope the US bombs the shit out of them, because it's like traders being positioned risk off. Like, come on, man. So it's a blood sport. It's a bit it's definitely a tough game, but that's what I see right now. Yeah.
I think if you were to see boots on the ground, then that's like then your scenario looks a lot more clear, where it's like, all right, boots are on the ground. This is going to be another like kind of 3 month plus ordeal. And that's something different than what we've seen before. Now it's like, okay, now there's actually boots on the ground. So yeah, that's something I'm on the lookout for as well.
I mean, I talked to Google Gemini a bit. So essentially 20% of the world's oil supply comes from the Strait. Okay. 5% of that has been diverted to different pathways. 15% or 10%, let's say best case scenario, 10% is still gone. So yes, that long term is not a huge spike in the price of oil, but short term, it's a massive spike, because all of the consumers, they want to purchase as much as they can to prepare for a possible even bigger escalation. So in the short term, above 100, 120 could happen, 150 also. Like, it could easily happen. Not long term, but short term spikes could go up a lot, which means also short term inflation spikes go up as well.
The longer that it happens, or it stays like this, like you mentioned, it's only if you cut out the 5% that has been diverted via alternative routes, 15% in the grand scheme of things is not going to ruin everything. It's just that in the short term, there's that like that fast consumption, like, oh my god, like scarcity, like, oh my god, I need to hoard all this. But as time passes and longer goes on, the less kind of reliant we need to be on the Strait. And so it could be very well a situation where you have that area just in a forever conflict. I think the longer that it plays out in a weird way, the more leverage the US has and the rest of the world has, because they're, we're getting it from other places as well. And then you also have too, like output from the Saudis and stuff like that. They're increasing. They just have OPEC, right? So they no longer have these quotas. They have their own quotas, and they can pump as much as they want. A lot of things going on behind the scenes that is trying to kind of hedge the need for the Strait.
And the SPRs, these strategic petroleum reserves, I believe that's the name, that's going out as well, keeping the prices stable. So you do have some, let's say, stabilizing factors.
I forget which data point, Nick, if you're in the background, if you don't mind typing it in, but there was some, it was a certain piece component of the core inflation that was still going down, and so you kind of have that kind of like self-resolving effect going on there. So even with the oil prices kind of staying elevated, you are seeing some kind of a natural drift lower in that, and so I think the Fed doesn't want to jump the gun too soon. But I think your case also makes a lot of sense. Like the insurance hike is what you call it, right?
Yeah.
To satisfy the
Yeah.
market a little bit could very well be what happens.
And did you see the jobless claims? So
It was better than expected, right?
it was the lowest in the last, I think, 2, 3, or 4 years. So a really, really good number. If we bring it up here on the Edge Finder, it should be under economic data.
Well, look at that. Yeah, I know it was
Yeah.
better than expected, but I didn't know it was that good.
Yeah, it was pretty good.
That
See,
is very
lowest
good.
number in, if you can go back, maybe go back 4 years if we can. I think it's like, you just go to months or years at the bottom. So at the bottom where it says days, I just put that to years, and then let's do 4.
Okay, so we're at 187.
So in 24 we had a similar print.
Yeah. 2020.
Okay.
Yeah, 24 we were the same. So 23 would be then. Yeah. That's really good, man.
Yeah, that's pretty good actually. So this also enables the Fed to be more hawkish, because, so just for the audience, the Fed is always balancing inflation and growth.
Employment, yeah. All right,
Employment and inflation. So if the employment is fine, if the growth is okay, well, they can actually hike rates to battle inflation, because they won't hurt the growth very much. Because if you want to control inflation, you will hurt the growth. If you want to control growth or heighten the growth, you will raise inflation. So there's always a sacrifice somewhere. And so let me see if we have.
I was just curious right here. I just asked Gemini, U.S. jobless claims effect on forward-looking non-farm payrolls. U.S. weekly jobless claims serve as a high-frequency leading indicator for the monthly non-farm payrolls report. So I'm curious if this is going to translate into a better NFP report. What I'm going to do once we come off, I'm going to look at this, the jobless claims, and just kind of reference the two side by side. Improvement in jobless claims. Does it really translate into a better NFP report? I'm curious to see what that is.
Yep. Yeah, maybe you can just take screenshots and feed Claude all of the data, because Claude will be able to pull up all of the correlations. I'll do the last 5 years. I think that should be okay, excluding 2020 maybe. Usually, what I saw professional traders do when they look at data, they usually exclude 2008 and they exclude 2020, because those were big events that were black swans.
I wonder if you can export this somehow.
I don't think so.
No.
But if you just take a screenshot, it should work.
Yeah. The only thing is that it kind of clusters up, so it's hard to read. But I'll just do it in small patches. It's fine. Yeah.
Or maybe Claude can grab it from somewhere else.
Claude can do anything, man. I love Claude.
Yeah, Claude is amazing. Absolutely. Best.
Claude is going to take us to the moon.
Best chatbot. So first time on the moon?
First time. Yeah, first time on the
moon. With Claude. But Claude, definitely, if you guys are doing any trading related work, Claude is the best. Like, I use Gemini for day-to-day stuff. I use ChatGPT for my trading with ChatGPT series, and I use Claude if I need to do any serious work or research or correlations or numbers. Tends to be the best for Claude.
They seem to be the leading one when it comes to, like, I think Claude, and then the competitor right now is like Kimi out of China. That's open source. So Claude had Fable 5 that is like the best on the market right now, and then they had released it temporarily so the public could get their hands on it, experience it, see how it is, and then they were going to re-release it back after the free trial for like a paid version where you basically pay on your usage. That was going to be the method. And then China released their own open source, the Kimi one, that was better than Claude. It was completely free. So then Anthropic said, well, we're going to release you Fable 5, along with your plan, kind of free, based on you have limits, of course, but it's basically free. And that is just a continued like back and forth, like they are fighting for the king spot, the top of the hill spot.
Okay, cool. Well, competition is always good for the end consumer. Although, of course, with China, I wouldn't know what they're doing with my data. So I don't know. Or maybe I'm spooked by X and social media. But I would rather go with the US, where there's at least a little bit of regulation, I'm guessing.
Yeah. No, that definitely worries me too. That I would never go for the open source Chinese model for sure.
Yeah, I heard China scans your junk when you go to the urinals. So
really,
no, it's a joke.
Oh,
essentially, the joke was that you said Kimi is the name, right?
Yeah.
So that it scans your whole bottom parts, right, when you go to the urinal.
Is that what it's called? Kimi?
I think so. I don't know. Well, I don't know. I should probably bring the post back from Twitter. So I'll send it to you if I find it.
Yeah. Send it to me, man. I'm gonna pivot out here because I know you got your portion of the segment. One thing before I go, I'm gonna drop the Telegram link one more time, guys. I know we threw a lot of promos at you, like as far as discount codes for Prop Shop Trader, 8cap, Ola Prime, all that stuff. You can find them all here inside the Telegram channel. So all in one spot. We are always throwing you guys the best discounts that we have to offer, along with free analysis and other things as well. So bonus content, all that good stuff. So go ahead and join the free Telegram channel. It is completely free for you to join. Marco, man, I hope you have an awesome weekend. Hope it's fun and relaxing.
Thank you.
We'll see you next week.
I hope you have a great weekend as well. And I'm looking forward to Monday.
All right, man. Take it easy. Bye-bye.
You too. See you. Goodbye. Okay, so let's continue with my solo segment. As far as my trades go, I'm in USD CAD. It is break even for now. So blue on the day, but not really doing anything. The main bet is straight remains closed. I think it remains closed by the end of this year, or at least with low capacity by the end of this year. Oil goes up. I think oil. So like Brent, by the way, is the best to use for this conflict. Brent could go to 100 or 210. That's what I'm betting at least. Inflation goes up above 4.2. Then the Fed needs to hike. And I don't think the Fed will hike. I don't think the Fed will hike in July. I think they hike in September. So the odds for July are a hold, which is what I would agree with. And for September, the odds are definitely for a rate hike for now. Maybe even 2 hikes. But I would say 2 hikes are too extreme. So 1 hike is okay. By the end of this year, 2 hikes are priced in. I don't know about that. Seems a bit aggressive. I think they do what's called an insurance hike, where the new chairman, which is Kevin Warsh, comes in and says to the market, look, we're serious about inflation. We're serious about bringing it to 2%. And we that's why we hiked. So if you look at all of the previous first rate moves from the new chairman of the Fed, most of them actually hiked rates to set a stance, to set a precedent. I'm sure Trump is going to hate it, but what you going to do? So 6 out of 7 of the previous new Fed chairmans actually hiked as the first move. 1 of them cut. So that's the stats. And I think Kevin and the gang are pretty happy to hike. Okay, maybe some of them even want to piss off Trump. So that's definitely a factor. And then Kevin says no forward guidance, but forward guidance is where all of those guys that like to talk, they get all of their publicity, because they're human just as you and me, and they like to be in the newspaper. They like to talk. So I don't think forward guidance will disappear anytime soon. Especially like you had Waller in his last speech, he was super hawkish. He didn't give an F about no forward guidance. So forward guidance will continue. what I wanted to say, yeah, hikes. So the dollar looks to be on an uptrend. The DXY looks to be on an uptrend right here. Okay. And I think we break out of this high. If we do, we have a lot of room to go up. We have a lot of room, let's say, to maybe 103 would be pretty good for my positioning at least. The bad thing is if I'm right and if the dollar goes up, everything else on the list goes down. Okay. So stocks, Nas, Nikkei, Dow, Russell, DAX, gold goes down, silver, copper, Bitcoin, crypto. Okay. Yeah, crypto just looks like shit. Everything goes down. Everything paired with the dollar goes down. That's the general story. My Swiss yen is starting to approach the 200 level. If you haven't been watching my segments, basically the only hiding place from the Middle East is buying the yen, in my opinion. I know on the JXY it's getting crushed, so it's just following USD JPY. But if you want to play it for Swiss yen, which is pretty low swaps, or maybe even positive swaps, if you want to sell Swiss yen, I would wait for a break of the 200 level. And this is the story of the Japanese government forcing pension funds in Japan to sell foreign assets and buy domestic assets. Basically sell US bonds, buy Japanese bonds. The effect of that would be a stronger Japanese yen. So that's what I'm playing here. And those are pretty much the only two positions I'm looking to take or that I'm in. As far as my individual stock picking goes, well, I got out of Best Buy. I got out of Crocs because Best Buy was below the 10 EMA when I checked the charts yesterday, and that is my sell rule. So I buy a breakout, as you can see, and then I sell once the price closes below the 10 EMA. It didn't close, but I thought it will, so I closed it prematurely. Crocs did close. So it was a breakout as well out of this consolidation pattern. And we closed below the 10 EMA, so I closed that position, that trade. It's not looking good because of the SPY. For my individual stock trading and just trading breakouts, I need the SPY to be in a clear uptrend. So this current market condition is shit for stock picking. This is great. This is great. This is shit. This is shit. This is horrible. This is bad. And this is again good. Okay. So if you want to pick stocks to the long side, make sure the SPY is on a clear uptrend and above the 50, the 20, and the 10 EMA. Very simple strategy, but a very, very powerful strategy. If you read the latest Market Wizards book, traders made millions of dollars using this simple strategy. Okay, millions. The main guy is Kulamagi. So Kulamagi, this guy. Okay. It's a simple strategy, but you need the right market conditions. Brent hit 102 yesterday. Euro is pricing in 2 hikes by the end of the year. Interesting. What is the euro dollar doing? That is the question. Euro dollar, well, it's going down. So it's all about the dollar. Marco, just curious, how is your GPT trading going? It's stuck right at break even. So for the last, I think, 3 or 4 months, the equity curve has been super flat. I didn't make an update for months now because there was nothing to update on. This was the equity curve. This, okay. So basically just break even trading. It hasn't really made new equity highs for months. Dollar milkshake, USD sellers make sense, buyers make money. I love Swiss yen, Marco, in it, but on any de-escalation, Swiss yen will rip higher. Really? I'm gonna have to check that, but I don't know. Like from the war, it's just been flat. So let's see, May. I wouldn't say so. I think Swiss yen has just been roaring higher forever, but that doesn't mean we can't get a correction to the 200 EMA like we got in July 24, like we got in October 22. So I think that could happen. The main bet is on the yen. I don't care about the Swiss. I just care about the swaps. And I do want to mention, if you guys want to get funded and expand your trading capital, do check out Ola Prime. So Ola Prime is 20% off with the code A1 Live. Okay. Now, the first thing with any prop firm that you should do, you should jump onto the Trustpilot. Jump onto the Trustpilot, 4.5 out of 5, 2.9K reviews. That's fine, especially in this niche. If the score is above 4, it's okay. And then you go to see all reviews. You check the ratio. If the 1-star reviews that are that are at 20 or 30%, I wouldn't touch that. If it's 9%, it's okay. The 5-star, of course, is another big thing to look at. And then just read the reviews. Read through them. Okay, do your research. Another thing why I like Ola Prime is no consistency rule. It's a big reason why I like Ola. So for swing traders, this is a must. And then with the code A1 Live, you get 20% off. So even Max likes it. And I know Max tried a lot of prop firms. He has a lot of experience. So if Max likes it, you know it's good. Max also says, Swiss is appreciating and might be the most to do so on a USD breakdown. Let's see, USD Swiss, USD CHF. Also, is there a guest after me today? Let me check if Tiger. Oh, okay, Tiger's here. Awesome. So I'm going to check out Swiss yen and then pass the show to Tiger. Swiss yen. Yeah, if there's a de-escalation, Swiss yen should go down. Or sorry, dollar Swiss, not Swiss yen. Let me see. We had a de-escalation in June. It hasn't really gone down much. Yeah. Okay, this is something for me to look at a bit more after my segment. Anyways, not to take up more time, thank you very much for watching. I wish you a great weekend. You can catch me next week every single day, 2 times per day. You can also catch me in the A1 Discord if you're part of it. I wish you good luck, great weekend, and I'll see you in the next one. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, traders? Hope you're doing well out there. Happy Friday. As always, it's a great day by default. It's a nice rainy day here in Kansas. It is awesome. It is also 68 degrees. So it's a quite the change of pace from the mid 90s. We touched 100 earlier in the week. I think right now, I guess it'd be 20 Celsius today. So for you guys across the pond, very nice day. It's raining all day, and I don't care if it's raining at all tonight. My hot tub's finally fixed, and I'm sitting in it. I'm going to get rained on at the same time. It's going to be marvelous. There's nothing better. Have you guys ever sat in a hot tub, outdoor hot tub when it rains hard? If so, you guys know. It's like the greatest feeling in the world. But anyway, let me know what you guys are looking at, what tickers you want to see. I've got a list of some things. I like a lot of the stuff on the Edge Finder, so I'm actually going to go do some digging on it. And definitely take advantage of Nick's code A1 Live for Ola Prime. If you guys are looking to save some money on your next challenge account or your first challenge account, it's a good one. Their prices overall are quite low compared to the industry average. So I think you'll like them. Check out the rules page, olaprime.com. Just go under the rules page. It's very clean, very transparent. They've updated that recently. So it's a lot simpler to read, not only from a challenge account perspective, but also once you get funded. So they break it down very simply for you guys on there. So definitely go check that stuff out. What's good, Tony? What's good? Man, it's Friday. It's all good. It's all good today. Dollar Swiss, Nigel. I don't know if he got to it or not, Marco. But yeah, we can definitely take a look at Dollar Swiss for you up there as well. Gold. Yeah, we'll definitely look at some gold. Absolutely. Okay. And yeah, I think he got the Swiss yen for you, Anton. If not, let me know. I can definitely check that out as well. Pound dollar, the EMAs have kind of flipped on the daily. So I'm a little hesitant about pound dollar at the moment, but I'll show you what I'm talking about here in a second. Aussie CAD says Tony Trust. Okay, so let's get to it. We got a lot of stuff to go through. Start with the Edge Finder Pound Swiss, still at the very top of the list. Yeah, like I said, I like a lot of these pairs. I really do. We got gold and silver now on the bullish list. Silver is still giving me that lower low on the daily. I still am just not quite. I'm still a little hesitant on silver. Gold has at least given us that higher low on the daily. So that's half the battle right there. We still need to see a higher high, though, for my taste. And again, I'm ultra conservative when it comes to the daily, guys. I want to make sure that the high and low structure is in my favor, preferably that I have the EMAs in line with it from a mechanical point of view. So we'll get into that as well. But excuse me. So yeah, let's just go start with what you guys got here. So the first one I think I saw was Dollar Swiss. Yeah, so let's go look at Dollar Swiss for you. Pretty neutral at the moment. So on the chart over here, though, let's go have a look. Let's go have a little look. Let's go take a look. Trend looks to be okay. Yep. Alligator's mouth is pointed to the heavens, opening up. That's the dark red line. That's the 8 EMA. The light red is the 21. I like to see this picture if I'm trying to buy, guys. When the 8 pushes higher, faster than the 21, it's a good look. That's a really, really good look. That's the foundation right there. It's not the 5-minute, the 15-minute, the 1 hour. This is the start right here. This gives me confidence in saying, okay, let's dig down into some smaller time frames, see if we can't find a zone to bounce off of. So now that we know the daily is good, we'll go full chart for you guys. Now we could draw, let's see here. I think I drew this zone up right here on a 2 hour. Yeah. Whether you draw it up on a 2 hour, a 4 hour, even a 1 hour, it's going to give us a pretty decent look. Okay. There's a 1 hour look. There's a 4 hour look here. If we go include this whole candle, which is often what I like to do. So I'll draw this up as a 4 hour. Now it didn't give the greatest gap, guys. The gap, runaway gap, acceleration gap, fair market gap, or fair value gap. I'm sorry, but it is a gap nevertheless. So I do want to pay attention here. The leg out, you had 2 decent candles. You had a little bit of selling pressure right here. I don't like that. I dislike that a lot, in fact. But I also dislike the fact that the volume picture wasn't the greatest. Okay, just average, boring green candles. Green candles on RSI means average volume. I don't like to do anything average on the chart. I got to see above average volume, ultra high volume if I get my periodic red candle in here, okay, like I have over here. But that is one spot we could keep an eye on. I mean, we do have a double top overhead. This could almost run, if we're looking at this on an aggressive approach, this could almost act as a flip zone. And I know I kind of broke down the 8 different supply and demand zones for you guys here a few weeks ago, but this would qualify, I think, as a little bit of a flip zone. So basically, If I go across these tops over here and just keep going, that zone is created. That zone is created right here at the former resistance point, turning into possible support on gold orders. So I do want to keep an eye on that. I do think, again, just looking at it from a technical perspective, because I don't have a good scoring on it. Top setups, Edge Finder's not really given a green light to buy this thing. But if I'm just looking at the technicals, and if I'm just looking at a fairly decently aggressive approach, well, that might be a decent spot to take a look at. Drop a little deeper into the 1 hour. We already was down here. There's going to be your 1 hour demand zone. So your confluence, you got a 4 hour, 1 hour confluence of zones. The 1 hour zone honestly gives a little bit better, prettier picture for the gap. There's a little bit better of a gap there. So I do like that picture. But again, that's a very aggressive approach. And it's also an approach when it's not even on our top setups. So I would personally think that there's better dollar-based assets to trade out there. But that's at least a picture to look at if and when we happen to get some bullish looks on the Edge Finder over the coming days. Okay. And who knows, by the time price runs away a little bit, that could start looking a lot more attractive. Right. I just don't think I would want to buy on an immediate pullback from here. I don't think prices ran away enough. It helped break that overhead resistance, which is a good thing, turned into a flip zone, but I just think it might be a little too aggressive. So that's what I would see. And honestly, the best zones would be down here a little deeper anyway. Here you got I think this might be a 6 hour zone here. You got a 4 hour zone down here inside of a daily. So ultimately that would be the much higher probability trades as one of these zones down here. Okay. So that's dollar Swiss for you. Let's see here. Aussie CAD, says Tony. Yeah, let's take a look at Aussie CAD. Was that Aussie CAD? Yeah, Aussie CAD. I think Aussie CAD was giving us a +5, so we can definitely take a look at that. Where you at, Aussie CAD? There you are. Kind of a puke fest. There's my daily all the way at the bottom. I got a zone on top of a zone down here at the bottom. Okay, I got a couple 4 hour demand zones kind of within the parameters of that daily. So ultimately, I think that would be the prettier picture. But what's my daily telling me over here? Ugh. Yuck. It's pretty disgusting. Pretty disgusting. You got just a bunch of ugliness. What does that look like on a weekly chart? Just a big sideways cluster, you know what. Okay. So yeah, I definitely would have zero interest trading anything within this whole entire range right here, basically. I just think that's one big black hole of equilibrium, fair market value. Ultimately, I want the discount. So I think the better discount would just be to wait at minimum for these zones all the way down here. You're still quite a few pips away. Aussie CAD moves about 55 pips a day on average for your average true range. So that's at least 2 days just to get down to there if it started dropping right now, 2 or 3 days. So, and then the thing is, even if you do come down here, what's the EMA is going to start doing? It's going to start pointing down. That alligator's mouth is going to be pointing downwards. It's going to try to catch a fish out of the pond, right? And then not to mention the lower lows and lower highs. I wouldn't want to fight the trend at this point. I drew these zones up when price was still in this area. But now we've had all this time for it to go sideways, and it's just got everything out of whack. Okay. The pH balance is out. And not to mention, it bounced into that overhead daily supply. Okay. From way back wherever the hell it's at, somewhere in the past. So I think there's better assets to trade than Aussie CAD personally. But I just don't like it. I absolutely I don't like it. I'm sorry. If we can break this nonsense up here and reestablish a new demand zone, then we may be talking. So break the rest of that supply, then look for a demand, something like that. I just wouldn't want to trade here. And honestly, again, if even if it does roll over and come down to these demand zones, I just don't like the trend at that point. So that's my thoughts on Aussie CAD for you. See, we got silver and gold. Yeah, let's get to that. Go look at some gold and silver. Again, they're both on the bullish list for the top setups. But so far, I still only like the picture on gold because this swing low was higher than this swing low back here, which, remember, bounced into that old demand zone. So that was really kind of the start of this turnaround, if you will, before we bounced into this supply zone confluence and got kicked back to the curb, kicked back downward. Well, it's reestablished itself. It's pushing up. We are currently bouncing into a zone, which had we broken that overhead structure, I would have been interested in potentially. We didn't do it. Now, if we're looking at it on a 1 hour chart, which is where I drew up this demand zone right here, and of course we're getting a bounce from it, then you could make the argument to say, well, Tiger, it broke this structure here, it broke this structure here, it broke this structure here. But again, I'm looking at it on a daily, guys. I'm just ultra conservative when it comes to turning around the big oil tanker out in the middle of Hormuz. You can't turn it on a dime like a speedboat. It takes some time to turn around. So until it breaks this until it breaks this call wall, okay, that we found on the new tool that Nick added in, call wall on, I guess that would be GLD. Do your measurements. This is where I found that call wall over here on XAU USD, right at that supply zone that I had drawn up, which was, I believe, a 1 hour. Or no, that was the 30-minute supply zone. Okay. 30-minute supply zone, call wall. I want to see a break and close above that at minimum. And I don't think I'm worried anymore about these old zones over here because it's already done its job. So let's just break and close above this zone right here. And then I think we're in business. And I know I've repeated that a lot over the last week or two, guys, but that's the picture. You know, until it does that, I'm not going to change my mind personally because I don't really get down onto the smaller time frames that much. I'm sticking to the daily on this. So anyway, that's my thoughts on it. Again, there's other strategies out there that are probably going to find a better signal to go long on this. It's just not with my supply and demand strategy. And then again, silver's given us that same bullish score, but it's nowhere near ready because we still have a lower low, unlike gold. Remember, gold had that higher low, but over here on silver, we still have that lower low. Same thing with the highs. We still have lower highs. So until we break these structures to the upside, I'm just not interested in it. I know that's the boring answer, guys. I know it's boring to hear, but that's just the way it is when it comes to higher time frame structures with me, guys. Yeah. I require more. So gold, silver. Okay. And I think I got you guys all caught up. Aussie CAD. Yep. Dollar Swiss. Okay. Yeah. Euro. Yeah. So let's get into the currencies now because I know that's Andrea's favorite. Pound dollar. Take a look at some. I think I saw a euro dollar, didn't I? Yeah. Euro dollar from Emma Bassett. Yeah. So over here on the edge finder, pound dollar is still giving us a +5. For good measure, euro dollar is a +4. So it's just barely tall enough to ride the score adjusted roller coaster. Let's go take a look at these majors for you guys. Okay, euro dollar. Let me just go to a single chart. Yes. Okay. So right off the bat, euro dollar is a no-go. Trend is not in my favor, guys. I know I mentioned this yesterday. We're starting to break down below that equilibrium to the downside. Lower lows, lower highs. EMAs are all out of whack to the downside. No thanks. I'm not interested. Pound dollar, on the other hand, has broken and given us that bullish impulse move. Broke all these structures over here to the left. Now, the downfall to this is I drew up this alert at one point at 132.5 when price was just starting to, when price was, I guess, still over here in this area, in this area here, because I was hoping for a quick break of structure and then retrace, but it got long and drawn out. We had a gigantic candle back on the 15th, which ultimately broke some more structures, but it pushed our moving averages too high is what it did. And so now that we're retracing down towards the zone that I obviously had the interest in, okay, the zone down here, again, at the 132.5 level, everything's turning around. We've established a low right through here, and now we're breaking our low. So now we've got a lower low, right? Just not very happy with it. I wanted this zone when price was still in this area, not after it's done all this up here. So it just kind of adjusts everything. Now, that's a hell of a discount. That's around the 70%, 75% fib retracement area. But I'm going to be picky on this. So I'm not saying I won't trade pound dollar anymore. But when it comes to what I want to see on this thing, rather than looking for a 1 hour bullish close, I'll probably upgrade that to a 4 hour candle close and just cut a little risk off. See, a 1 hour close was good for me when price was still over here. But now that we've done all this and we're kind of establishing that new downtrend, a little bit of smaller time frame downtrend. I'm just going to be a little careful. I still want to see the basing structure or the contraction point. I still want to see a expansion leg, expansion up, expansion down to collect liquidity on both sides of a would-be consolidation, kind of like what we've got over here. You could very easily just take this whole thing and just move it over here, and that would be fine for me. Okay, that's fine. That's the contraction point I'm talking about. Is this collection of candles right here? Okay, that's a good enough contraction for me. So if I just redraw it now, I just want to see a break above and a break below for our spring for possible buy. That would be the entry. But again, rather than a 1 hour bullish close, 1 hour bullish engulfing candle with a wick on it, close at the top of the range, VSA pickup down here, it's going to be a 4 hour now. I'm upgrading my alertness for pound dollar. Okay, so that's pound dollar. Going and taking a look over here at some of these other assets, pound Swiss, pound yen. That's some of the top two pairs over here. Pound Swiss, I've already talked about this earlier in the week, guys. I'm looking at this more of an accumulation possible, a possible accumulation trade for the banks. If I'm a bank, if prices starting to come down, this is where they essentially start DCAing in or dollar cost averaging or accumulating. Buy a little here on this swing low, buy a little here on this swing low, buy a little more here, buy a little more here until we get into our, I think, 2 hour demand or 1 hour demand for the actual, to shell out or to finish out their order for a possible push to the upside. So that's what I'm looking at for pound Swiss. I don't want to do anything up in this area because, at minimum, this right here would be our last bullish impulse move. But I'm looking for sweeps of all this liquidity. That's what I'm looking for pound Swiss. Okay. Pound yen was number 2 currency pair. Over here, remember, we did bounce into that 4 hour zone over here. I just felt like it might be a little high. And I'm still ultimately waiting on this 215.5 level all the way down here. Same thing. Give me a drop. Give me a basing structure. Give me an expansion leg up, sweep liquidity up, expansion leg down, sweep liquidity underneath the base, drop in, spring in to the zone confluence for possible buy to the long side. So that's going to remain the same for the number 2 currency pair currently on the list. Aussie dollar, third. Go over here to Aussie dollar. Remember, Aussie dollar and US dollar are still partying it up in the basement of futility. They both have a 40% beat rate on the economic calendar among the 8 major currencies. So if we're just looking at the chart, though, again, same thing. We'll get a little bit of stop loss accumulation here. And we have an overhead supply zone that we have to worry about. In fact, we have a daily 4 hour. So this is a landmine, guys. If you're going long Aussie dollar, be aware that you've got a 4 hour zone over here, right here, inside of a daily. If we go to the daily, we're looking at this candle here, right here. Now, the gap isn't the greatest on the daily on this particular one, but the 4 hour is. So I would just be aware of that, guys. Remember, I buy and sell from the supply and demand zones, but I also mark them up so that you see where the potential landmines are, especially if you're going against my bias. You still want to be aware of these zones because they will take away your unrealized gains at times and take you to zero or even worse. So you just got to be careful with them. Overall, though, I think these zones are a little close together. If I'm just looking at the daily supply, the daily demand, I don't know. I don't know if that presents the greatest reward. I mean, from zone to zone, from proximal line here to the proximal line here, that's 89 pips. Just call it 90 pips. I don't know. I don't think that presents the greatest reward risk, especially when zone to zone down here, that's 40 pips. Then you add in a stop loss, and you've basically gotten less than a 2-to-1 reward risk. So it's about a 1.75. So that's up for debate. If you guys think that's a good reward, great. But 2-to-1 minimum is my taste. I prefer 3-to-1, but 2-to-1 is okay. So to me, it just doesn't present enough reward for the risk. So that's why Aussie dollar is further down my interest list. And but let's see, I already went over euro dollar, went over pound dollar. What was the other one I was looking at? Euro Swiss. That was another one I had some interest in. Let's go over here real quick. Trend is up. We've broken through the daily 4-hour supply zone confluence. Did we get a 4-hour candle close yet? Because that's what I was waiting on. Did we get a close? I guess the argument could be made we did get a close right there, just barely. It's not like it was exciting, but we did get a close. So that opens the door now, I think, to this zone, this little bit of a zone structure right here. Leg out, gave me my gap, yellow VSA candle. And at one point, we climbed pretty high. Obviously, we did have some sellers step in, the ones that were on the other side of this zone. And you have some breakout traders just because we crossed over this zone. Okay, that zone all the way over there to the left. Breakout traders, and then they got retraced. So they, I'm gonna stick with the zone. I'm gonna stick with the kind of the same structure, guys. Master pattern. If it can drop base out, give me that liquidity sweep on either side. Might be possibly looking at an opportunity here. Okay. Right here. As always, guys, not financial advice. These are just the levels I'm looking at. 92.71 is the one I'm looking at here for Euro Swiss. Okay. UK, I believe, is back on the list, the FTSE. Of course, they've had a lot of fun this week with the new prime minister, the new cabinet members, Larry the Cat overseeing the whole situation there, the one standard that they do have in British politics over there. They've also had some pretty good data come out. I think that was today, wasn't it? Retail sales, wasn't it? Yeah, retail sales. They did have a 1% actual number against they thought it was going into the negative, the economists over there, minus 0.3, but instead we had a 1% gain on that market. So that was, or on that report. The flash data was good for the PMI, both sectors, services and manufacturing. So it was a pretty good day of data overall for the pound. But I do believe the more recent data sets for those same reports were bullish as well. So if we go over here to UK heat map real quick, yeah, we're still at a 60% beat rate. Still at a 60%. So that the percentage didn't change. There's your retail sales, there's your unemployment rate. The CPI, PPI numbers, they did go backwards. That was, of course, 2 days ago. So 60% overall. And yeah. Oh, yeah, FTSE. So I need to go to the FTSE real quick. A little annoyed by this thing. I had 2 zones on this. I think it was 2 zones. Yeah. I had 2 zones on this, guys, that worked out. I just wasn't a part of it. Look at this. I drew this one up earlier in the week. Nailed it. Drew this one up the other day, and it's getting a push as well. But UK had fallen off the list for a few days, back to neutral, so I just avoided it. But it just goes to show the power of these zones. Okay? With the proper stop loss, this would have been a winning trade down here. And now, obviously, this one's currently in progress, but you do have some overhead supply, some overhead resistance to worry about. So even had I gotten into this trade, I would have been out by the time we reach this zone anyway. Probably take profits just right here at the swing high, just ahead of supply zone. So a little annoyed that I didn't get into those trades, but that is what it is. Standards, rules. I didn't break my rules. So that in itself was a win this week, guys. And then also, let's double check over here what you guys got going on. Kiwi dollar, says Harsh. Yep. Ooh, Euro Kiwi. Haven't heard that one in a while. Yeah, let's take a quick look at those. I do have a few minutes left. Kiwi dollar is also a +5. Again, a lot of these are just living on the edge. They're right there. They're just barely tall enough to ride. Kiwi dollar, I'm watching this zone right here. We're not that far away, to be honest with you. The only downfall to this Kiwi dollar long idea, number one, start with the daily. Okay, higher highs, higher lows. We just wicked through this little swing higher here, but we wicked right into what? What did we just wick into? A 4-hour supply zone, guys. So not only do we hit the daily, but we also hit the 4-hour just back on Monday. Ever since we just barely wicked into that point, what happened? Started plummeting. The momentum, in fact, is coming down a little harder than the overall move up. Or, yeah, you could probably make the argument it's about the same. The point is, I think it's coming in a little hot and heavy. And not to mention the alligator's mouth over here on the right on the daily. Looks to me like it's trying to close up, doesn't it? The 8, is it not looking like it's coming closer and closer to the 21? Remember, guys, the 8 is the dark red. The 21 is the light red. So the faster is the dark red. The slower is the light red. That's a very big thing for me. I don't like to see the alligator's mouth come into a shut like that. Again, I drew this demand zone up when price was over here in this area. But then we had all these days for the moving averages to kind of start slowly turning, creeping back around. So it just makes me a little more cautious now on Kiwi dollar on this 4-hour zone over here. But it is still there. Same thing. Not saying it's necessarily going to take me out of a trade, but I do see it trying to base up here. Okay, over the last few 4-hour candles. So that's your contraction. Now I want to see expansion up, expansion down for possible buys at that point. However, I'm going to be extra strict on the bounce, on timing the bounce on this, making sure I get the proper trigger candle for that long. So normally it's a 1-hour bullish close, 1-hour bullish engulfing candle, hammer candle, closes at the top of the range with a wick underneath, either one. A lot of VSA step up. But rather than a 1-hour candle, I might have to make it a 4-hour candle. And all of that is because of the supply zone bounce. So the jury remains out on that. We are pretty close right now, but we'll see. The zone itself is okay. The leg out volume, that kind of sucks, to be honest with you. And that's another reason why I would want to step it up a higher time frame, just to get a higher time frame confluence. VSA candles were just not good. Not the greatest, guys. So anyway, let's get rid of that. And then Euro Kiwi. I haven't looked at Euro Kiwi in a long time. Oh, wait a minute. Did I draw that up? No, we're not even on the list. So it looks like the last thing I drew up on the Euro Kiwi was a supply zone confluence. When did I draw that up? Oh, a couple weeks ago, I guess. Yeah. Okay. So as always, got to start with the daily. What's the daily showing me over here on the right? Showing me a downtrend. But again, the alligator's mouth, it looks like it's trying to swing back. So I do have a pretty nice looking daily supply zone, 4-hour supply zone confluence up here, but I just got no signal. We had a liquidity push underneath this swing low from the end of May, just wicked in. Now we're starting our ascent back upwards, but we're about to bounce into a supply zone. So with the EMAs closing up, again, if I'm just looking at this on a technical aspect, I see a strong push down that broke structure, or I should say broke demand. So that's a bearish look. But now our EMAs are closing back up. So I don't like it. I don't like it. It's just not very clear and distinct to me at all. Yeah, not a whole lot to add to that. Plus, this is technically my impulse move, swing high all the way down to swing low. That would make it a bearish look. And if I short anywhere in this area, what am I shorting in? What am I diddling in? Diddling in the middle, right? Curve analysis says swing high to swing low. The middle third, do I want to short in the middle third? Probably not. Especially since we didn't get a close at a close down here. We did get that liquidity sweep, but we didn't get a daily close. So that's why I'm hesitant about this. Had we gotten a close, had we gotten this candle to close, well, then I could comfortably look at zone as a strong point of contention, as a point of strength, because it had the ability to push and break and close below structure. But we didn't get the close, so that's a little disheartening. So yeah, it's just a no-go for me. But that is a zone. At one point, I had that as a bearish look for some reason. I'm going to delete that, though, because I don't need that up there. And, yeah, that's Euro Kiwi for you. What else did I have? I thought I had one or two. Oh, it's already 9:15, guys. I got to get out of here. Yeah, sitting on my hands, guys. Again, I'm pretty close to a couple of these alerts I've got set over here. But I'm just going to be extra careful on some of these. It's obviously Friday. I personally prefer getting in trades Sunday evening / Monday morning when the liquidity of the New York volume starts, rolling in. But rather than hourly candles on some of these closes, for verification's sake, I'm probably just going to make them 2-hour or even 4-hour candles, just because of the structures I kind of outlined. So anyway, guys, that's about all I got for you for the day. I'm going to enjoy my rain. I've got my window down. It's a wonderful day. I'm going to go play with my cat. have a drink later on tonight. You have a wonderful day. We'll talk to you guys again on Monday. Take care.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edgefinder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.